Good morning, students. Welcome you all once again in the live classes organized by Board of Studies of ICAI. Students, today we are going to cover Ind AS 38, Intangible Assets. While if you ask some student about Ind AS 38, they will say that this is kind of a complex standard, but not to worry. If you understood Ind AS 16 property, plant and equipment very well, so 50% of the standard is like a revision of Ind AS 16 property, plant and equipment. So friends, when you will revise for your examination, when you will again read this series of asset-based standard, my request to all of you, please cover Ind AS 16 first. And when you read Ind AS 38, so try to revise the concept of Ind AS 16 with Ind AS 38. So in Ind AS 38, almost 50% of the concepts belongs to Ind AS 16 only. Okay, right? And then we'll discuss Ind AS 40 investment property. Okay. So students, with this, let's start Ind AS 38 intangible asset. Friends, talking about intangible assets, do we have this standard in accounting standard? Do we have the standard in accounting standard?
Yes.
Which one? AS 26, right?
AS 26,
we
yes.
have accounting standard 26 in accounting standard, right? So largely, if I'll talk about AS 26 versus Ind AS 38, so largely 70 to 75% concept of Ind AS 26 are sitting in Ind AS 38. Right? So see, you haven't started reading Ind AS 38, but you are aware that 50% of the concepts you have covered by way of Ind AS 16 property, plant and equipment, and 75% of the concepts are same in comparison to accounting standard 26. Okay, so it means this standard is not new standard for us, but yes, in Ind AS, things are more detailed, the concepts are more granular. Okay, and hence not to worry, we are going to cover each and every aspect of every standard, right? Each and every aspect of this standard as well. So if I talk about the applicability of standards for intangible asset, in accounting standard, we have AS 26 in India. In Ind AS, we have Ind AS 38 in India. In globally, there is IAS 38, International Accounting Standard 38, which is on intangible asset. And our Ind AS is the converged version of IFRS applicable to India, right? So three standards, AS 26, Ind AS 38 and IAS 38. Okay, three standards on intangible assets. Students, when we talk about any asset related standard, right, and when we talk about accounting for asset related standard, what are the four pillars of accounting standard? Tell me.
Recognition, measurement, presentation, disclosure.
Absolutely great. Absolutely great. Recognition, measurement, presentation, disclosure, right? So when to recognize in the books of accounts? For example, if you have incurred an expenditure on advertisement, so you are promoting your business, right? And hence you have given an advertisement in the newspaper, right? Like Amazon, have you seen the big billion days sale advertisement in the newspaper by Amazon, Flipkart? Have you seen that?
Yes, sir.
Have you seen any advertisement by Reliance Fresh, Big Bazaar, any
Yes,
Super
sir.
Mega Mart, right? That the sale is coming on 15th August, Christmas, right? So the point is, when you are making a outflow, when you are incurring an expenditure, whether that expenditure, of course, that expenditure may give you the future economic benefit, okay? But whether that expenditure is an expense or it is an intangible asset. It is an expense, it is not an intangible asset. So when you are incurring an expense on advertisement, while it may give you future economic benefit, but not necessarily you have any control on that. If you have given a newspaper and no any customer will come to you, what you will do? Nothing, right? So the point is, your asset related standard, liability related standard. So these Ind AS accounting standard talks about when to recognize, means whether this expenditure has to be recognized as an intangible asset or not, right? So when to recognize means you need to see some criteria. Then how to measure? Once you decided, yes, sir, it is my intangible asset. This item has to be recognized as an intangible asset. But at what value? So how to measure? At what value needs to be recorded? Then once you decided this is the value, this is the cost, this is the fair value. Okay. Then how to present it in the books of accounts? Where to present? For example, for intangible asset, it will come on the face of the balance sheet. And if there is an intangible asset under development, work in progress, it will come on the face of the balance sheet. And the amortization on intangible asset, it will come in the P&L. And there are some disclosures in the notes to accounts. What are the sort of disclosures which are important for the user of the financial statement? So recognition, measurement, presentation, disclosure, we will talk about in this standard, right? Okay. So coming with the objective and scope. So what way we are going to cover? Theoretical part, we are going to cover objective and scope quickly. Okay. Oh, just a minute. I think my screen has gone. Are you able to see my screen, my PPT?
Yes, sir, it's visible, sir. Good morning, sir.
Good morning. It's visible. Okay. Yeah. So we are going to talk about the this thing, objective and scope, and then I'm going to cover what after objective and scope. What is going to be covered? Just a minute. I have some problem. I think in my screen. I hope screen is not visible now, right?
Yes, sir. Now it's have gone.
Okay. Just allow me a second. Allow me a second. I think this thing has already. Is it visible now?
No, sir.
अभी भी visible नहीं है. मुझे एक बार सिस्टम रीस्टार्ट करना पड़ेगा, कुछ प्रॉब्लम आ रही है सिस्टम में. कैन आई रीस्टार्ट द सिस्टम? कैन यू प्लीज अलाउ मी 5 minutes?
Yes, sir. Yes, sir.
Yeah. So please stay here. I am just restarting my system. Okay.
Okay, sir.
calibrate the definition of intangible asset. We'll spend a good time on the definition of intangible asset. You guys are able to remember the definition of PPE? Do you remember the definition of PPE, property, plant, and equipment?
Yes,
Yes,
sir.
sir.
Yes.
Very
Tangible is
It's a tangible assets held for protection,
the
supply,
production.
administration, rental, more than one period, which means
Yes.
12 months.
Yes. Yeah. So then we'll discuss intangible asset definition. Then we'll talk about recognition criteria, initial recognition and measurement, right? We'll talk about at what value intangible asset is going to be measured at the time of initial recognition. Then mode of intangible assets, subsequent recognition means reporting date, okay? Subsequent measurement. And then we'll talk about amortization and useful life and the disclosures, okay? Yes. Objective. What is the objective of this standard? This standard prescribes the accounting treatment for intangible asset which are not dealt in another standard, right? Why it is saying so? That it prescribes the accounting treatment for intangible asset which are not dealt in another standard. Friends, what is the major difference between tangible asset and intangible asset? Tell me.
Sir, intangible asset does not have the physical presence, and tangible asset has the physical presence.
Yeah. So tangible asset has the physical existence. Intangible asset does not have the physical existence. You can see, you can touch, you can hold tangible asset, but you can't see, you can't touch, you can't hold intangible assets, right? Can you hold software? Can you see software? Answer is no, right? So there is a program inbuilt in the computer, right? So you can't see, you can't touch, you can't hold, but of course you can see furniture, you can hold furniture, you can touch furniture, machinery, car, vehicle, building, land, right? But intangible asset does not have a physical existence. So let's talk about deferred tax asset. Whether deferred tax asset is an intangible item or not.
Yes, sir. It is intangible items.
See, what word I have used? I haven't used the word intangible asset, right? I have used the word whether deferred tax asset is a tangible item or intangible item.
It is intangible item, sir. Intangible liability or intangible asset.
It's an intangible item, right? So you can't see, you can't touch, you can't hold deferred tax asset, but yes, it's an asset. Deferred tax asset is an asset, right? It will give you future economic benefit. For example, the company has a losses. So the company has recognized deferred tax asset, okay? And this deferred tax asset will be reversed in future, okay? This deferred tax asset will be reversed in future. And why you are recognizing deferred tax asset? Probably you are recognizing deferred tax asset because you have paid more taxes today and tomorrow you will have to pay less taxes. So this DTA is going to reverse in future, okay? So friends, whether deferred tax asset is accounted for under Ind AS 38, is it an intangible asset?
No, sir. It's separately dealt with the separate standard, income tax.
So deferred tax is separately dealt in income tax standard, which is Ind AS 12. Financial asset, investment in mutual funds. Whether financial asset is a tangible item or intangible item.
It's an intangible item, but it's not dealt with here. It's a separate standard is there, financial item, instrument.
So Anushi, whether financial asset is a tangible item or intangible item?
Sir, intangible asset dealt in Ind AS 109.
Yes. So it's an intangible item, it's an intangible asset, but which intangible asset? Not as per Ind AS 38, it is as per Ind AS 109, right? So when you look at the asset side of the balance sheet, you will find lot of intangible asset, but all intangible assets are not dealt in by Ind AS 38. Few intangible assets are dealt in by some other standard, right? So have you got this? So this was the reason why in standard it is written that this standard prescribe Ind AS 38 prescribes only those accounting treatment for intangible asset which are not dealt in by another standard. Okay, now you have understood this. So don't get confused if somebody will ask you or somebody will tell you that deferred tax asset is an intangible asset. He's right. But the only difference is deferred tax asset is an intangible asset, but which intangible asset? Which is dealt in by Ind AS 12, not by Ind AS 38. If somebody will tell you that investments are intangible asset, yes, investments in mutual fund, bonds, government security, these are intangible asset. But which intangible asset? Not as per Ind AS 38, as per Ind AS 109. Okay. So this standard also talks about recognition criteria. This standard also talks about determination of carrying amount. That how to measure carrying value of the intangible asset. On which date? Carrying value on which date? Carrying amount on which date? Yes?
Balance sheet date.
Balance sheet date. Carrying amount on the reporting date, carrying amount on the balance sheet date. Right? So reporting date. And what was the formula of carrying amount? We have already covered the formula in Ind AS 16. What was the formula of carrying amount? Priya. And my question to Priya, what is the formula of carrying amount? Akshay, what is the formula of carrying amount? Udandam?
So cost minus accumulated depreciation minus accumulated impairment.
Very good. Cost minus accumulated depreciation minus accumulated impairment losses. But in case of intangible asset, what is the word which we are using in instead of depreciation?
Amortization.
Amortization, right? So काम एक नाम अनेक. The work is same, the purpose is same, the nature is same, but for tangible asset we are using the word depreciation. For intangible asset we are using the word amortization, right? So we will be talking about, we will be covering determination of carrying value, which is equal to cost minus accumulated amortization minus accumulated impairment losses. And then we'll talk about disclosures. Okay, very good. Friends, talking about the scope, this standard is applicable in accounting for all intangible asset. This standard is applicable in accounting for all intangible asset except financial assets in accordance with Ind AS 32, except exploration and evaluation assets in Ind AS 106. Negative list is given. Expenditure on the development and extraction of minerals, oil, natural gas and similar resources. Intangible asset arising from insurance contract issued by insurance companies, right? So intangible asset covered by another standard like Ind AS 105, non-current asset held for sale, deferred tax asset, ROU asset, Ind AS 116, asset arising from employee benefits, goodwill covered under Ind AS 103, right? Held by an entity for sale in the ordinary course of business. If the entity's business is to sell software like SAP, Oracle, Tally, so they are in the business of selling softwares. So those intangible assets are not intangible asset as per Ind AS 38. Those are as per Ind AS 2 inventories. Asset arising from contract with the customer. So all intangible asset will be covered as per Ind AS 38 except negative list is given, except these standard. Why? Because these standard are covered as per the respective standard. Okay. But other than these standard, all the assets, all the intangible assets are covered under Ind AS 38. Okay. Is that clear? Is that clear to everyone?
Clear.
Yeah.
Cool.
Now coming to the definition. Sir, what is the definition of an intangible asset? Friends, before understanding the definition of intangible asset, let's talk about the definition of asset and why it is important. Intangible asset, looking at the definition of intangible asset, one of the most important aspect is control. What is the challenge in intangible asset? The biggest challenge in intangible asset comes because of control. How you will establish a control? Because something which you can't see, something which you can't touch, you can't hold. These intangible assets are like a bhutiya asset. Bhutiya asset means ghost asset, right? Ghost asset. You can't see, you can't touch, you can't hold, right? So you have installed a software and some activity starts happening on your computer or laptop. Right? Some paranormal activity or normal activity. Normal activity, not paranormal activity. Right? So the problem is, in case of tangible asset, establishing control is very easy. But in case of intangible asset, establishing control is very difficult. Okay? And hence, it is important to know what is the definition of an asset. Then we will be covering definition of intangible asset. And why, let me tell you. So, have you heard that somebody in your family or in your friends or in your neighborhood had booked a flat, right, in the high-rise building or a high-rise society developed by the builder, right? Somebody has booked a flat and the occupation certificate, the occupancy certificate has not been given by the authorities, right? The OC certificate of that society has not yet come. It's been 5 years, 6 years, 10 years, right? And it happened in my past in the society where I was living, and of course I was on a rental accommodation. So when I was living in the society in my past, so that society was 15-year-old society, 15-year-old building, but the occupancy certificate was still not come was still not given by the authority. It was still not come because probably the builder has not done the proper compliance. Okay. So the registry was not happening. When the occupancy certificate is not there, the registration certificate will also not be given. So registry was not happening. But people have given the entire money. They have waited for 2, 3, 4 years. Then they started taking a position, right? So while the legal ownership has not been transferred in the name of the buyer, but as per agreement to sell, buyer has given the money, all the money, and they have taken the possession of the house, of the flat. So how you will establish control? By taking a possession, and let's say when you took a possession, and what is the meaning of the control? The definition of control says that when you are able to enjoy the future economic benefit of that asset, or when you restrict others to enjoy the future economic benefit from your asset. So when you took a possession, so will you be able to control your house? I mean to say, will you able to enjoy the future economic benefit of that flat or house? And will you able to stop others from using your house? Yes. आप क्या करोगे? लॉक करके रखते हो, आप दूसरे को रोक लेते हो अंदर आने के लिए अगर आप नहीं चाहते तो, right? Nobody can enter into your house without your permission. So for tangible item, the control, if there is not a legal ownership, the control is also coming by way of position. Yes or no? By way of position. But in case of intangible asset, right, this position, because something which you can't see, touch and hold, how will you ensure the position, right? And hence, in this case, in intangible asset, it is talking more about the legal ownership, right? So let's talk about the definition of asset. It says that an asset is a resource controlled by an entity as a result of past event, right? Entity is controlling that resource. Why? Because of the past event. In the past, entity has paid a money and purchased that asset, and from which future economic benefit are expected to flow to the entity, and from which future economic benefits are expected to flow to the entity. Okay. So 3 things. Number 1, there must be a control arising out of the past events, and future economic benefit are expected to flow. Future economic benefits are expected to flow to the entity, right? 2 things. Okay, what are the 2 things? 1, there must be a control. 2nd, future economic benefit should be there. Future economic benefit should be there. Okay. So friends, now what is the definition of intangible asset? An intangible asset is identifiable non-monetary asset without physical substance. There are 3 important parts in intangible asset. An identifiable, part number 1. Non-monetary asset, part number 2. without physical substance, part number 3. We are going to cover 3 aspects here. An identifiable non-monetary asset without physical substance. Let's talk about without physical substance first. Let's talk about the third part first. What is meant by without physical substance? Udandam, what is meant by without physical substance?
Or it cannot be felt,
It cannot be.
like it's not existing on, like, in the physical format.
It is not existing in the physical form. Very well explained. It is not explained in the it is not available in the physical form. It can't be touched, hold, and seen, right? Okay, without physical substance. Understood. Now tell me, robot is a tangible asset or intangible asset? Robot. Have you seen any robot?
It's intangible.
Robot is a tangible asset or intangible asset? Is it a property, plant and equipment or intangible asset? क्या है रोबोट?
रोबोट टेंजिबल एसेट है, लेकिन उसमें जो सॉफ्टवेयर है वो इंटेंजिबल.
Okay. Alexa is do you have Alexa at your home? The small device?
Yes, sir.
So I have Alexa at home, and I put my alarm on Alexa. So yesterday night I told Alexa, please put an alarm for 5:45 in the morning, 5:45 a.m. Alexa said, okay, I have set an alarm for 5:45 a.m. tomorrow morning. So in the morning, I asked Alexa, what's the temperature outside? What's the weather outside? Alexa told me, the weather is pretty, humid. There is a lot of rain outside, and right now the temperature is 35 degrees Celsius. I asked Alexa, can you please play Hanuman Chalisa? Alexa started playing Hanuman Chalisa. Sri Guru Charan Saroj Raj, Alexa started playing. Right. So the point is, that is a device. Alexa is a device. I can see, I can touch, I can hold. Right. So I can see that physical existence. But the question comes, what is important in Alexa? Whether that skeleton is meaningful, I mean to say, whether that skeleton has a major value, or the knowledge embodied in the Alexa, the software embodied in the Alexa, the program embodied in the Alexa, that is more important, which gives more value and utility to Alexa. Tell me, what is more important?
The software.
Sorry? What is more important? Whether that skeleton...
It is the software which is more important.
Yeah, software installed in that Alexa is more important.
Yes, the program, the knowledge, the software, Saminathan, that is more important, right? Which makes Alexa as an Alexa. Otherwise, how come the question which I'm asking, and day before yesterday, I asked Alexa, if I took a loan of 50 lakh rupees, right, for a period of 10 years at an interest of 8%, what is my monthly EMI? Alexa has given me the answer. See? So I'm asking history, I'm asking geography, I'm asking mathematics, I'm asking temperature, I'm asking weather. So Alexa is answering everything. And I'm also instructing Alexa to play songs. Alexa is playing songs also. So friends, in case of Alexa, in case of robot, and let's take another example, pen drive. So you went to buy a return filing software or some accounting software. The shopkeeper has given you the software in a floppy disk, in a compact disk, CD drive, or in a pen drive. उसने आपको pen drive में software दे दिया, and he charged 50,000 rupees for that software. So friends, the pen drive you can hold in your pocket, you can touch, you can see. Tell me, in that case, what is more meaningful? Whether that pen drive or the software installed in that pen drive?
The software is stored in that pen drive.
In the pen drive, software it is there in the pen drive. So the question is, when the software comes with a hardware, right? So how is it going to be capitalized? Is it going to be capitalized partly as a software, partly as a hardware, or completely as a software? So how it is going, or completely as a hardware, means PP, how it is going to be capitalized?
Sir, we have to check what is a significant portion. If it is a significant portion as a software, then it is an intangible asset. If the significant portion as a hardware, then it will be the tangible item.
You're absolutely right. You have to see what is the significant portion, right? So the robot is a skeleton, right? And why that robot is an intangible asset, the value of the program built in the robot is more meaningful, more significant than the skeleton of the robot, right? And hence, the significant portion lies in the value of the software, and hence it has to be capitalized as a intangible asset. Like pen drive, that pen drive is 500 rupees worth, right? But the program installed in the pen drive, the software, that is more important. It will be classified as an intangible asset, right? So the Alexa device is an intangible asset. Okay, it is not a tangible asset. It is an intangible asset because the program is more important. The software is more important, right? And hence it is an intangible asset. Computer or laptop in which operating software are there? Tell me. So I bought my laptop and I got MS Windows, etc., etc. The operating software is inbuilt in this laptop. So should I capitalize the amount paid as a laptop as a PPE, or should I capitalize it as an intangible asset, or should I capitalize partly as a tangible, partly as an intangible? Tell me. Practical life
Sir,
में
it
आपने क्या
has to be
किया?
capitalized. Sir, it has to be capitalized as a PP because the significant portion as a hardware.
And features. And it's
So till now, till now I never seen anything is capitalized as intangible asset during my experience.
So when you buy a computer or laptop and it comes with a operating software like MS Windows, PowerPoint, Word, Excel, right? So it is not an intangible asset. You are capitalizing it, laptop as a PP, computer as a PP, right? So if the software is integral part of the hardware, then it will not be capitalized separately. But what happens if you will purchase it separately? If you purchase some, antivirus software, some other software, like you want to do some, graphics kind of stuff in your laptop, and you have purchased a software for graphics, whether that software is an integral part of the hardware, whether that software should be capitalized separately as an intangible asset, answer is yes, right? It is
yes.
not an integral part of the hardware. Robot we discussed. Telecom company has got a 5G license from Government of India by way of a contract. So Government of India has given a piece of paper. Government of India has given a certificate in the form of license. Government of India has given a certificate. And Government of India had charged 50,000 crores for telecom license. You can touch, you can see, you can hold that piece of paper. So is it a tangible asset or intangible asset?
Intangible asset.
Intangible asset, right? So license is capitalized as an intangible asset. So in case of intangible asset, when I talk about the paper, which is registration certificate, the skeleton, the device, the pen drive, these are the packagings. These are the kind of a packaging in which this intangible asset are stored, right? Stored. Okay. Yes. So now coming to the non-monetary asset. So have you understood the meaning of without physical substance? Any question here? Any question?
Sir, in case of robot, there is not like computer and laptops that the hardware is the software is forming an integral part of the hardware. So you are not audible.
Hello, am I
Yes, sir.
audible
Yes,
now? I think
yes,
I
yes,
don't
sir.
know. There is some glitch in my internet connection in the laptop today. The intangible, because I'm teaching intangible asset today. So intangible items are giving me problem today. But am I audible now?
Yes, sir.
Yes, sir. Yes,
It is giving us an example
Am
for
I
us.
audible now?
yes,
Whether my
sir.
screen is visible? Can
Yes, sir.
anyone
Yes.
please confirm?
Visible, sir.
Yes, sir. Visible, sir.
Okay. I hope Excel file is also visible, right?
Yes,
Yes.
sir.
Yeah. So without physical substance, yes. Any question here without physical substance?
Sir, my question was likewise in computers and laptops, why not we are recognizing robot also? Because that intangible portion of software is forming an integral part of that whole skeleton of that robot. So, what is the difference between that particular point?
See, the skeleton is an integral. So basically, the skeleton is an integral part of the intangible asset, yeah, right? So what is more significant? Whether skeleton is more significant or knowledge embodied in the skeleton is more significant?
Knowledge embodied in the
Knowledge,
skeleton.
right? So why
Yes.
somebody will buy a robot? So let me tell you one more example. In Gurgaon, so anyone who belongs to Delhi NCR in this group?
Yes, sir.
Yeah. So in Gurgaon, let me give you a real life situation. So in Gurgaon, lot of maids. So there is a scarcity of people who are cleaning houses like maids and servants. There is a lot of scarcity. I was talking to my friend yesterday. So he told me I purchased a robot for cleaning my house, for doing jhadu pocha and all the stuff. So I asked him that how big it is. So he told me it's just a small size robot. And I used to tell him, can you please clean my house? Right? Can you please clean the floor? So robot started cleaning the floor. Okay. And it's a very small kind of a robot. And I asked how much price you have paid for that robot, cleaning robot. So he told that I have paid 85,000 rupees. 85,000 rupees. So the point is, for a small skeleton, 85,000 rupees. So that is not a skeleton, right? So that is how the program is developed, how the knowledge is embodied, right? So that is more significant than than that skeleton. Okay. And hence, you can't split everything. You can't split everything. Otherwise, in case of a robot, that knowledge is more significant, you understood, right? And your purpose, how your future economic benefit is getting achieved. Your future economic benefit is getting achieved by using the knowledge after application, the knowledge which is there in that software, right? So here the hardware is an integral part of the software, and hence this entire structure has to be capitalized as an intangible asset, not as a tangible asset, right? But for example, if you got an invoice which is splitted into two parts, and the skeleton also has a significant amount of value, and the intangible asset also has a significant amount of value. Let's say the total cost of the laptop is 10 lakh rupees, right? And the program or the software cost is, let's say, 6 lakh rupees, and 4 lakh rupees the skeleton cost, right? In that case, you can capitalize separately, but normally it is not splittable. It is not splittable, right? So you got the invoice as a robot. So in that case, the skeleton, the package, the cover, is an integral part of the software and hence it has to be capitalized as an intangible asset. Okay. ऐसे तो आप पेन ड्राइव भी कर सकते हो separately capitalize because you know the cost of the pen drive, but it is not significant. Okay. Yeah.
Okay, got it.
Any other question? Any other question?
No, sir. Got it.
So what is the definition of intangible asset? The definition of intangible asset is identifiable non-monetary asset without physical substance. Without physical substance we have covered. Now let's discuss the meaning of non-monetary asset. What is the definition of non-monetary asset? Non-monetary asset is an asset which is not a monetary asset. Which is not a monetary asset. Non-monetary asset is an asset which is not a monetary asset. Which is not a monetary asset. Now, what is a monetary asset? Monetary asset क्या होते हैं? Whether anyone has any idea what is a monetary asset?
Which are receivable in cash, like debtors, receivables.
Sir, it gives the right to receive the cash.
Yes. So monetary asset are those assets which are receivable in cash, right? Which are going to be realized in cash. But instead of cash, I will put the word which are going to be realized in fixed unit of cash. Which are realized in fixed unit of cash. Monetary asset which gives a right to receive cash into a fixed unit of currency, or which is going to be received in a fixed unit of cash. For example, trade receivable, loans, cash, bank balance. Now tell me, inventory. Inventory is available for sale. Whether inventory is a monetary asset or a non-monetary asset?
Non-monetary asset.
Why non-monetary? Inventory you will sell and you will get a cash by selling inventory. Why it is a non-monetary asset?
Whether you will get cost or NRV.
So, nutshell, you are saying you don't know how much price you will get. Correct? And if it is a perishable kind of inventory, and if you will not be able to sell that inventory, probably it will be expired or damaged or destroyed. Correct? So, you are absolutely right. When there is an inventory in the shop, inventory in the godown, inventory in the custody of the supplier or the seller, can seller say that I have a right to receive 1,000 rupees on this inventory? No. Right? Because inventory is lying with him. He does not have any right to receive. किससे लेगा? If no customer will come, if anybody will not purchase the inventory, how come he will get the money? So inventory is a non-monetary asset. But let's say he has sold inventory for 500 rupees to Mr. Ram on credit. Now tell me, Mr. Ram, which is trade receivable, sundry debtors, is it a monetary asset or non-monetary asset?
Yes, sir. It's a monetary asset.
It's a monetary asset. Why? Because now you are saying, I have a right to receive 500 rupees, fixed unit of cash, 500 rupees from Mr. Ram. Why? Because you have sold goods to Mr. Ram and he has agreed to pay you 500 rupees. Okay. So inventory is a non-monetary asset, but sundry debtors, trade receivables are the monetary asset. Property, plant and equipment, monetary or non-monetary asset?
Non-monetary.
Non-monetary asset. Because you can't say, I have a right to receive 20 crore rupees from sale of this plant and machinery. You don't have any right to receive, right? But that property, plant and equipment has been sold and the agreement has been entered. The property, plant and equipment has been sold, agreement has been entered. So now the money has to be received from the buyer. Is it a monetary asset or non-monetary asset?
Monetary.
Now it becomes monetary asset, right? So monetary asset are those assets which gives a right to receive cash into a fixed unit of currency. Cash in your pocket, 100 rupee note. Monetary asset, non-monetary asset?
Very much monetary asset.
Even on the cash, on the currency, it is printed on the currency that I am promising to pay 100 rupees to the bearer of this instrument. मैं धारक को 100 रुपए अदा करने का वचन देता हूं. Have you seen these lines on the currency?
Yes, sir.
Yeah?
Yes, sir.
Yes. So it is a monetary asset. So what was the definition of intangible asset? An identifiable non-monetary asset without physical substance. Example, non-monetary asset are those assets which are not a monetary asset. For example, PP, investment property, biological asset, inventory. Okay. So these are the non-monetary asset. An identifiable non-monetary asset without physical substance. Without physical substance. Okay. Monetary assets are those assets which has to be received in fixed or determined amount of money. Then, identifiability. What is meant by identifiable? What is meant by identifiable? An asset is identifiable when an asset is identifiable when it is separable or arises from contractual or legal rights. When it is separable or arises from contractual or other legal rights. What is meant by separable? What is meant by separable? Separable means capable of being separated or divided from the entity and sold, transferred, licensed, rented, or exchanged. What is meant by separable? Separable means capable of being separated from the entity. For example, goodwill. Let's say people are saying you are a good teacher. Okay. Your teaching style is very good. And that's how the goodwill is associated with me. Okay. So due to my goodwill, I can charge a higher price from the students. Okay. Everybody charging 5,000 rupees. I am charging 10,000 rupees, but the students are coming to me for having FR classes. So due to my goodwill, I am able to generate more future economic benefit. It's an asset to me. But let me, or please tell me, let me know, can I sold goodwill separately from myself? Means without selling myself, let's consider myself as an entity. So without selling an entity, can the goodwill be sold to the third party?
No, sir.
No. What about others?
No, sir.
It cannot be sold. It cannot be sold, right? Goodwill is just like a naam. Goodwill kya hai? Goodwill is like a naam. Goodwill is like a image. Goodwill is like a brand image. It's like a naam. Okay. So without selling an organization, you cannot sell goodwill. You cannot sell goodwill. So that is why internally generated goodwill, you are never capitalizing, right? Internally generated goodwill, I cannot capitalize. Why? Because it is not separable. It cannot be divided. It cannot be separated. It cannot be rented from the entity, right? It cannot be, it is not capable of being separated or divided from the entity. It cannot be capable of getting sold separately, getting transferred separately, getting licensed, rented, or exchanged separately, right? And hence it is known as it is not separable. So if an asset is not identifiable, it cannot be capitalized as an intangible asset. Okay. So that is why internally generated goodwills are also not capitalized, because it's not meeting the definition of separable. Second example, market share. Let's say Fevicol. You must have heard about Fevicol and you must have used Fevicol also, right? Fevicol is the product of Pidilite Industries Limited. Pidilite का ही product है ना Fevicol.
Yes, sir. Adhesive storms like that.
Yes. So this company Pidilite, who is Fevicol is brand of Pidilite. So this captures the market share of, let's say, 70-80%. This captures the market share of 70-80%. So can Pidilite capitalize the market share? Can Pidilite capitalize the market share of this 70-80%? Can it capitalize? Can it got valued and get it capitalized in the books of accounts? What's your view?
No, sir.
Why?
It's like goodwill.
No,
So-
no, sir. It
cannot be
cannot be
separated.
capitalized, sir, because that market share.
No, so I have given you the definition of intangible asset. Three legs are there. Whether this market share is without physical substance, yes or no?
Yes.
Yes. Whether market share is a non-monetary asset means you don't have a right to receive fixed unit of currency. It's a non-monetary asset. It's not a monetary asset. Means अच्छा market share है आपका तो उससे आपको economic benefit तो हो ही रहा है ना. You are able to sell goods to 80 customer out of 100 customers. Is it identifiable? Means is it separable?
It is
No.
not separable, sir.
It is not separable. You can't sell market share. Tomorrow Pidilite cannot sell this market share to Reliance Industries, and it cannot say that out of 10 customer, 8 customer will come to you. In 8 customer, Alok is there, Samanathan is there, Ankit is there, Priya is there, Anushi is there, Neha is there, Megha is there. So Pidilite, we don't have any contract with Pidilite, and Pidilite don't have a contract with us. Pidilite cannot enforce us to buy goods from Reliance, right? So Pidilite cannot sell market share by dividing the market share from the Pidilite. Right? Yes, if the promoter of Pidilite will sell Pidilite to Reliance, automatically the market share will also go to Reliance. Okay, but the point is this market share cannot be divided from the company. It cannot be separated from the company. Market share cannot be rented out to some other parties. Market share cannot be exchanged, cannot be transferred, and hence it is not meeting the definition of separable, and hence it will not be capitalized, right? So an asset is identifiable if it is separable or it is arising from contractual or other legal rights. So whether this market share is arising from contractual or legal rights, answer is no, and hence it is not meeting the definition of identifiable, and hence it will not be capitalized as an intangible asset. Okay. Second example, there is a broadcasting company, okay, and government has given a license to broadcast like radio. There is a 98.3 FM Radio Mirchi, okay. So of course there is a company which has a channel called 98.3 Radio FM. Government has given a dedicated broadcasting license of a national program on the 98.3. Okay. And the company has paid 1 crore rupees for getting the right to broadcast that program. And government has given that rights to broadcast this program to this radio company. This right cannot be transferred. This right cannot be exchanged. So let's say this 98.3 company has one more channel, which is Radio 94.1 FM. So this radio company wants to broadcast this program on 94.1 also, on this channel also, but government has given the broadcasting license and rights only on 98.3. So this company will not be able to run this program on 94.1 Radio FM channel. So question number 1. This entity has paid 1 crore rupees and got a license to broadcast. And this license is non-transferable, right? It cannot be sold. It can't. So you can't do anything except broadcasting the program for a period of 5 years, let's say. My question to you, is it separable? Whether this broadcasting program, right? Whether this broadcasting right, is it separable? Is it meeting the definition of separable?
No, sir.
No, because this program cannot be, this broadcasting license cannot be sold separately, cannot be exchanged, cannot be rented, cannot be licensed. Yes, if the promoter of 98.3, if the shareholder of this company will sell this company to somebody else, so this program will travel with this license will go with the 98.3 channel also. So tell me whether this broadcasting license, broadcasting rights, whether we will capitalize this as an intangible asset or not. Saminathan, what's your view?
Sir, my view is that we can amortize over a period of time, sir. It can be.
My point is, will you capitalize or not capitalize this broadcasting license?
Yes, sir, we can capitalize as intangible asset.
But it is not separable.
But Sir, it's not separable, but we have the legal rights and contractual right to use that. So it is meeting the condition of that identifiable asset.
Yes, you are absolutely right. Friends, the word is not and, the word is or. The asset will be considered as identifiable if it is separable or it is arising from contractual or legal rights, right? So this company has a legal right, this company has a contractual right, this company has paid the consideration, this company has got the license to operate in a certain manner, right? And that's why this company has got a license, this company has paid the consideration. So it is arising from contractual or other legal rights, and hence it will be capitalized as an intangible asset. Okay, so two conditions. An asset will be considered as identifiable when it is separable or it is arising from contractual or legal rights. Okay, so identifiable we discussed. An asset is identifiable when it is separable or arises from contractual or legal rights. Separable means capable of being sold, rented, licensed, exchanged separately from the entire business or entity. Market share will not be recognized as intangible asset because it is neither arises from contractual or legal right nor it is separable. Reliance Communication has purchased a telecom license from Government of India. It is recognized as an intangible asset, right? Because it is coming from the contractual or legal rights. Okay. And it can be separable also. Like you remember, so Reliance Communication was Anil Ambani company. Reliance Jio is a Mukesh Ambani company. So Reliance Communication has sold the telecom licenses in favor of Reliance Jio also. Okay. So these are separable. These are also arising from legal or contractual rights. Correct? Is that clear? Identifiability illustration number 1, ICAI study material. Sun Limited has an expertise in the consulting business. In years gone by, the company gained a 30% market share for its service business and intends to recognize it as an intangible asset. Evaluate whether the action taken by the company justified. What do you say?
Those market share cannot.
Not record this market share as an intangible asset.
Some
Tell me what is missing. Why? Why it is not an intangible asset?
market share is meeting the identifiable asset, but however, it is not separatable and nor it has arisen from contractual right.
So it is not meeting the definition of identifiable, right?
Yes, sir, not meeting the
Market share is
definition.
not identifiable. You are not controlling your customer. You can't control customer. You can't enforce customer, right? Today they are purchasing from you. Tomorrow, if some new brand will come, they will shift to that new brand. Believe me, Flipkart. So I was the big fan of Flipkart up to 2013. Okay. So I used to purchase a lot of products from Flipkart up to 2013-14. But Amazon has taken a major shift, and Amazon has, just kept behind this, Flipkart. So since 2015-16, I hardly using Flipkart. I'm using Amazon more and more instead of Flipkart. Okay. So being a customer, Flipkart is not controlling me. Flipkart can't force me that, listen, man, you need to purchase from me only. No, I can't do that, right? I can't do that. Okay. So friends, this market share is not meeting the definition of identifiability. Okay. And hence, why it is not meeting the definition of identifiability, it is neither separable nor arising from contractual or legal rights. Okay. So yes, it is not meeting the definition of intangible asset because it is not identifiable. Okay. Identifiability of intangible asset. Illustration number 3. Pluto Limited intends to open a new retail store in a new location in the next few weeks. Pluto Limited has spent a substantial sum on a series of television advertisements to promote this new store. The company has paid an amount of rupees 8 lakh for advertisements before 31st March 20x1. 7 lakh of this sum relates to advertisements shown before 31st March 20x1 and 1 lakh to advertisements shown in April 20x1. Since 31st March 20x1, the company has paid for further advertisement costing rupees 4 lakh. So what is written in the first paragraph? In the first paragraph, they want to open a new retail store, okay? And they have spent a good money on the advertisement for the promotion of the new store. And why they want to put this huge money on advertisement? Because they are foreseeing that when we do the advertisement, more revenue will come, more customer will come, and we will have a future economic benefit. Yes. So the company has paid an amount of rupees 8 lakh for advertisement before 31st March 20x1. How much amount company has paid up to the reporting date? 8 lakh rupees. And 7 lakh of this sum relate to advertisement shown before 20x1. So out of 8 lakh rupees paid, 7 lakh is for the period up to 31st March 2001. So the advertisement which were published, which were broadcasted, so before 31st March 2001, and 1 lakh worth of advertisement has published in the newspaper after March 2001. So I can say like I have paid Times of India or Hindustan Times 8 lakh rupees. And Hindustan Times published in its newspaper 7 lakh rupees worth of my advertisement up to 31st March and 1 lakh rupee worth of advertisement after 31st March. Okay. And the company has paid since 31st March 2001, means after 31st March 2001, the company has paid for further advertisement costing rupees 4 lakh. The company has paid for further advertisement costing rupees 4 lakh. Okay, right. So subsequently, the company is also paying 4 lakh. Pluto Limited is of the view that such cost can be carried forward as intangible asset. Such cost can be carried forward as an intangible asset. Okay. Since market research indicates that this new store is likely to be highly successful, analyze the treatment of the above cost in the financial statement for the year ended 31st March 2001. Yes. So what's your view, friends? And Neha, what's your view here? So Neha, I wanted to understand your view. Doesn't matter right or wrong. Tell me. This question came in exam. Apply your logical bent of mind. What you will do here?
Sir, it should be deferred tax. Deferred asset.
First of all, Neha, this advertisement expenses which this company has incurred, is it an intangible asset or is it an expense?
Sir, in my point of view, it is an expense.
It is an expense. Okay. So 8 lakh rupee has been paid up to 31st March 2001, but 7 lakh rupee services has been received. 1 lakh rupee services has not been received up to the reporting date. So are you saying that 7 lakh rupee will be recorded as an expense up to 31st March and 1 lakh rupee has been shown as a prepaid expense or a deferred asset? Prepaid expense is also an asset, right?
Yes.
So are you saying that?
Yes, sir.
Okay. So in subsequent to 31st March means in the next year, you will expense out 1 lakh rupee plus 4 lakh rupee, which the company has paid. This is your view?
Yes, sir.
So 7 lakh rupee in up to 31st March 20x1 and after 31st March 20x1, 5 lakh rupees. This is you are going to charge as an expense. So why you will not capitalize this amount as an intangible asset? Saminathan, your view, please.
So my view is that under identifiability conditions, it is not separable because the customer, because of the advertisement, it is not sure that the customer will buy the product. So we will not provide the guarantee on that. But we do not have any legal rights and contract also between them because of the advertisement. So it has to be expensed appropriately, as you discussed by Nega as well. Prior to that, March 2021, it has to be expensed for that year. The next things it has to be prepaid, booked in prepaid, and accordingly it has to be amortized based on the expenses incurred.
Okay. So the point is, and you have made a very good point, that if I am giving an advertisement in the newspaper, Hindustan Times, Economic Times, Times of India does not guarantee me. It cannot say that. It only says that my accessibility. So my newspaper is reaching to let's say 10 million hands on a daily basis. So what they are saying that what is my reachability and accessibility? Okay. But whether that 10 million guys will read, of course, it is part of the newspaper. But whether they will react after looking at the advertisement, I don't know. Okay. I'm not guaranteeing you that if you are spending, let's say, 8 plus 4, 12 lakh rupees, I'm not guaranteeing you even for a 12,000 rupees. That listen, 12,000 rupees worth of customer will come to you after reading this newspaper. Right. I'm not giving you any guarantee. Okay. Or there is no guarantee of the customer, no guarantee of any revenue, no sales guarantee, right? So it is not arising either from contractual or legal right, or you cannot sell, you cannot let out, you cannot rent this advertisement asset, right, in addition to the entity. So whatever benefit has to come, it has to come to this entity. I cannot say that, Saminathan, I am selling this advertisement in your favor. Right. I can't sell this advertisement in your favor. It is in my name, right? It is in my name. So as you guys have rightly mentioned, there is no guarantee, there is no control over the customer. It is not meeting the definition of identifiability, and hence it is not capitalized as an intangible asset. Okay. Clear? Is that clear? And whatever you told, 7 lakh rupee will be incurred as an expense, 1 lakh rupee as a prepaid expense. Okay. And in the next year, 5 lakh rupees worth of expense has to be recorded. Fine. Absolutely clear. Okay. Yeah. Great. So friends, we discussed about control. So basically, we talked about an asset. What is an asset? An asset is a resource which is controlled by the entity. So control is a very important leg in intangible asset. And what is a control? So control gives you a power. Control is arising from the power, right? An entity controls the asset. The entity has a power to obtain future economic benefit, and power to restrict. That is more important. Power to restrict the access to future economic benefit of others. Let me give you an example. I have written a book on Indian accounting standard. My book treatise on Ind AS. I have written this book on Indian accounting standard. So I haven't done this copyright. There is no patent, no copyright. Somebody in India who is sitting 2000 kilometers away from me has copied my book. Do I have the power to stop him? Do I have the power to stop him? No.
No, sir.
Because I don't have any copyright. Okay. So the point is, I'm not saying that I will just, I'll hold his hand and I'll ensure that he'll not be able to write. Okay. It's not that. The point is, when I will be able to know, when I will get to know somebody is copying my content, am I able to stop him or not? Am I able to stop him by accessing the future economic benefit, my future economic benefit? Answer is no. But in the another scenario, what I did. So yes, this is a real scenario. For all the content and that book treatise on Ind AS, I have the copyright. I have the copyright. Now tell me, somebody who's copying my book and I got to know about this information, tell me, shall I stop him or not?
Yes, sir, you can do.
I can file the litigation, I can file the suit, because it is kind of a infiltration of a copyright which is there with me. I have the copyright of the content, and how can he use that content? So copyright has given me a power from where I can restrict the others to using my future economic benefit. I can restrict the others to access the future economic benefit associated with me, right? So friends, what is a control? Control comes with the power, and power comes with the contractual or legal rights, right? For intangible asset, in absence of legal right to protect, an entity usually has insufficient control over the expected future economic benefit. For example, a team of skilled staff, customer relationship, loyalty, these are not considered as an intangible asset. Why? Because there is no power, because there is no legal right to stop them. A customer is very loyal to you, and that customer is purchasing goods and services from your entity since last 20 years. So, can you capitalize that customer loyalty as an intangible asset? Answer is no, because you don't have a power to control that customer. If tomorrow his son has grown older and now his son wants to buy all the goods and services from the e-commerce, the father is not, very tech friendly. So the father believes in, human interaction, and father believes in buying the goods from the known shop. But the son is very tech friendly. So son is exploring the website from where he got the good discount and got the delivery at the doorstep. So are you controlling the father? I mean to say that customer, that yes, he is a loyal customer and he will continue to purchase the goods from me, and I can capitalize the benefit which I will receive from selling goods to this customer. Answer is no, because you don't have a control. You don't have a control. Another question from ICAI study material. Another question, right? Illustration number 2 of ICAI study material. This is illustration number 2. Company XYZ Limited has provided training to its staff on various new topics like GST, IFRS, Ind AS, और अब तो वो भी आ रहा ना Income Tax Act 2025. Have you heard about Income Tax Act 2025?
Yes, sir.
Yes, sir.
Yes, sir.
Sir, we have had also applicable from our attempt, sir.
Also applicable from?
From May 27 attempt, sir.
Yeah. Yes. अब एक यही बाकी रह गया था, इनकम टैक्स एक्ट 2025, वो भी आ गया. So all the see friends, at times, when a student used to talk to me or a fresher chartered accountant used to talk to me, so they are saying, sir, every time things are changing. Earlier it was service tax, now GST. Now, sir, income tax act is coming. Earlier it was accounting standard, now Ind AS. This is blessing for all of you. You guys have to work hard today, but when you become a future chartered accountant, you are absolutely ready chartered accountant, right? All the old chartered accountant are getting scrapped day by day because they don't have bandwidth to understand this entire new act. Okay, while I'm not saying they are not able to work, but the point is the young chartered accountant have a more and more kind of a potential and more opportunity, right? So it's a blessing for all of you. Okay. Yeah. Yes. So this company has provided training to the staff on various new topics like GST, IFRS, Ind AS to ensure the compliance as per the required laws. Okay. As per the required laws. Can the company recognize such cost of staff training as an intangible asset? Because the company foresee the future economic benefit. Tell me, can the company do that? It is clear. It is clear that the company will obtain the economic benefit from the work performed by the staff as it increases their efficiency, right?
Answer is no, sir.
Why
No,
not?
sir.
Why not?
Why? Because yeah, Anushi, please go ahead.
Yeah.
Because company do not have any right over the staff. The staff may move out of the company, so they do not have any right.
Absolutely right, because the company does not have any control over the staff, right? So what is the definition of control? Control arises from the power, and power to access future economic benefit and power to stop others from accessing the future economic benefit. Means I have given a good training to my staff. I have ensured that my staff knows Ind AS very well. Okay. And my staff has learned all Ind AS. And now after learning all Ind AS, my staff has resigned and he wants to join Big Four at 40% more salary. I can't pay 40% more. Big Four can pay. So by giving a training, am I getting a power to stop the staff? Answer is no. Answer is no. Means
sir.
I don't have a control to stop my staff to access the future economic benefit in future. I don't have a control. Or can I ensure, or do I have a right to tell my staff, see, whatever you learned from me, learn from this company, learn from this training, you can't apply in future in your other organization? Can I stop other organization to get the benefit from my staff?
No, sir.
Answer is no. Even people are learning from their past experience and applying that experience for the new learnings, right? यही तो होता है. जब when you become a chartered accountant, whatever you have learned in your articleship experience, you will apply that experience on day one, right? From the day one, you will apply that experience. You will say that, sir, the Ind AS 116 accounting, Ind AS 115 accounting is like this only. Okay. So it is not meeting the definition of control because staff may choose to resign the company over the time. Hence, the company lacks the ability to restrict the access of others to enjoy those benefits. Therefore, the staff training cost does not meet the definition of intangible asset. Any question here? There must be a question. And I know the question. Any question? I don't know why you are not asking that question. So, sir, what happened if I have given a training to the staff and the company will get the bond filled from the staff that you can't move from this company for at least 2 years. Bond भी तो होता है बहुत सारी companies में.
Yes, sir. In that case, also they can break the bond and they can pay the compensation, right?
Absolutely right, Saminathan, and you really. So I am pleasantly surprised by this answer. Yes, you're absolutely right. So see, employees are not the slave. Employee are the human resources. They are the main power. Okay. You can't force them to work for you for 3 years. Okay. Either it has to be a bond or it has to be a compensation. Okay. You can choose to resign and you can pay the compensation. No any court of law will say that, no, listen, you have to complete 3 years and then only you can move out. Answer is right. So they're absolutely right. They can choose to pay a compensation and hence it lacks the definition of the control criteria of the control. Okay. And hence it will not be considered as a intangible asset. And when the company is paying to the company is paying for the training, this training cost has to be expensed off in the P&L. It cannot be capitalized. Okay. So friends, control we discussed. Future economic benefit can arise by way of cost savings, by way of more revenue, by way of other benefit resulting from the use of the asset, right? For example, use of intellectual property right in the production process may reduce the production cost. Okay. So this is the future economic benefit definition. Now we reach to recognition criteria. Friends, what we have covered since morning? Anusi, do you want to explain what we have covered since morning?
Sir, we have covered the definition of intangible asset. In that, we have covered that the assets on which we have a control or which will give future economic benefit. It's a non-monetary asset, so these will come under the definition of intangible asset.
So
Then we
shall I complete this? So first we started with the objective of the standard, then we covered the scope of the standard, then we covered the definition of an asset, and in the definition of an asset, 2 words were very important: control and future economic benefit, right? An asset is a resource controlled by the entity by due to past events, and future economic benefit is probable. Then we discussed the definition of intangible asset. An intangible asset, 3 aspects we have covered. 3 aspects. Which were 3 aspects? Identifiability,
Non-monetary asset.
Non-monetary asset, and
without physical
physical substance, right? Right, Anushi?
Yes, sir.
So we discussed an intangible asset is an identifiable non-monetary asset without physical substance. Yes. Over to you now.
Yes.
Yeah.
So further, we have discussed few assets which are, although they are intangible, but they do not come under Ind AS 38. So we have discussed about those assets also. And then identifiable, we have discussed that they should be separable and they should give contractual right. That point we have discussed.
Separable and or separable or?
Sir, or.
Or. Either it is
Yes.
separable. So for meeting the identifiability criteria, either it should be separable or arising from contractual or legal right. At times it is not separable, but it is arising from contractual or legal rights. Okay. So either it is separable or arising from contractual or legal right. It can be, it is meeting the definition of identifiable, right? Non-monetary asset are those assets which are not a monetary asset. And what is a monetary asset? Monetary asset are those assets on which there is a right to receive fixed unit of cash. There is a right to receive fixed amount of cash. Okay. And non-monetary asset are asset other than monetary asset. For example, property, plant and equipment, intangible asset, investment property, inventory. These are the non-monetary asset. Okay. And friends, without physical substance, of course, it cannot be seen, touch or hold, right? For looking at the physical substance, and so in this case, you have to look, for example, if there is a combination of software and hardware, tangible and intangible, you have to see what is the significant portion, number one. Number two, that what is the integral part, whether hardware is integral part of software or software is integral part of hardware. So you need to see that. Okay. So we talked about these aspects along with 3 illustration number 1, 2, 3 from ICAI study material, right? Now we have reached to the recognition criteria. What is the recognition criteria? Friends, 2 recognition criteria we read. 2 recognition criteria we have read in Ind AS 16 PPE. What were those 2 recognition criteria? Can you tell me quickly? In PPE कौन से 2 recognition criteria हमने पढ़े थे?
Sir, future economic benefits should be there and also cost should be reliable measure.
Yes. 2. And believe me, student of this class, अगर आपसे रात को कोई सपने में भी पूछे ना, what are the recognition criteria for any asset, always say future economic benefits should be probable, cost can be measured reliably. These 2 recognition criteria is good for all the asset on this planet. For all the asset on this planet. Okay. See, 2 recognition criteria here also. Future economic benefit is probable, cost can be measured reliably. Right? Generally, cost is known. Generally. Third, sir, if only these 2 criteria would have been given, is there any difference between a tangible and intangible asset from the perspective of recognition criteria? अगर सिर्फ ये दो क्राइटेरिया दिए होते, नेहा, कोई डिफरेंस होता?
No, sir.
No, sir. Yes. No, madam. So no difference. So that is why to create a difference in the recognition criteria under Ind AS 16 and Ind AS 38, one more criteria has been added. And what is that criteria? Neha, what is that criteria?
Sir, meet the definition of intangible
Meet
asset.
the definition of intangible asset. Meet the definition, or what is the definition of intangible asset, Neha?
Sir, intangible asset that can
Identifiable.
yes, sir, identifiable
Non-monetary asset.
non-monetary asset and without physical substance.
Tangible asset PP has a physical substance.
Yes, sir.
Yes. Tangible asset is a physical substance. So by putting this criteria, it has differentiate between PP and intangible asset. Have you understood the logic, the reason? Yes. So PP has 2 criteria, 2 recognition criteria. Ind AS 38 intangible asset has 3 recognition criteria. Future economic benefits should be probable, cost can be measured reliably, and it should meet the definition of intangible asset. It should meet the definition of intangible asset. Okay. So when intangible asset is recognized, it has to be initially measured at cost. Okay. Right. So recognition criteria we discussed. Recognition criteria. What are the 3 recognition criteria? Future economic benefits should be probable. Cost can be measured reliably. and it should meet the definition of intangible asset: identifiable plus non-monetary asset plus without physical substance. Initial measurement, initially intangible asset has to be measured at cost. Okay, measured at cost. Future economic benefit we understood. Future economic benefit means benefit in future. Okay, friends, now we reach to the initial measurement. Okay, and friends, this is one of the important part of the standard. One of the important part, right? If the question will come, the question will largely come from this part. Okay. So the accounting, the measurement of intangible asset depends on how intangible asset is going to be acquired. Intangible asset can be acquired in different ways. For example, intangible asset can be separately acquired. It can be separately acquired. Intangible asset can be part of a business combination. Means you went to the market, you went to the tally vendor and you buy a tally software. You have a tally license. Okay? You have acquired a company, and in the company you got many intangible assets. So by acquiring a company, you got many intangible assets. The government has given you intangible asset as a government grant. For example, rights. So, in every city or in many places, there is a small airports. Have you seen Army Airport? Kent Airport, Army Airport. Have you seen that?
Yes, sir, but nobody can go inside
Yeah,
except the authorized person.
and even in small towns, in small cities or small towns, there is no commercial airport, right? There is no big airport like Delhi, Mumbai, Ahmedabad, Kochi, blah 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 blah. In small towns, these commercial airlines are using the army airport, the government airport, right? The government airport means army airport, defense airport. So at times, when the company, so government is inviting the big players, the big industrialists to install their plant in the remote area. And they are giving them airport landing right free of cost. You must have seen few helicopters or small planes of industrialists which are parked in the airport, like Reliance. So in Delhi Terminal 2, you can see Tata's, Reliance, or Adani's, Ambani's, their aircraft, their helicopters, they are parked in the airports. So for every landing or every flying, the government is charging money from the operators. Okay. So the government told, I will give you airport landing right free of cost for 5 years if you install your plant in this remote area. Friends, this is a government grant. Okay. So intangible asset also arised by way of government grant. Then exchange of asset. Have we covered this concept in Ind AS 16? Exchange of asset?
Yes, sir.
Barter.
Yes, sir.
Barter, right? So we have purchased an intangible asset, but instead of paying in terms of cash, what we have paid? We have paid in terms of another asset, another intangible asset, another tangible asset, or it could be a combination of asset plus cash. You remember we did an example of Pluto Limited where the aircraft was purchased and what was exchanged? Building. Land and building was exchanged, and the fair value of the land and building was 15 million plus 3 million of cash, and the fair value of the aircraft was 20 million, but we have recognized it 18 million. Suna lag raha hai? Suna lag raha hai? Is it something
Yes,
which
sir.
is heard or blank?
Discussed.
Heard है ना? मैंने तो आपको नंबर भी बता दिए. I told you the number also, 15 million, 3 million, 18 million, 20 million. Yeah. So exchange of asset. Intangible asset can also be acquired by way of exchange of asset. Okay. Then internally generated intangible asset. Okay. Few intangible asset could be internally generated also. Pharma companies, when the COVID came, what was the biggest issues? What was the biggest challenge in front of the pharma companies at the time of COVID? To come with a COVID vaccine, right? To come with a COVID vaccine. So they were doing a lot of research and development. They were doing a lot of research. What could be the right formula which can kill the coronavirus? Correct? So internally generated intangible asset. Then internally generated goodwill. Internally generated goodwill. Okay. So whether internally generated goodwill will be capitalized as an intangible asset or what happened? Tell me, क्या करना है internally generated goodwill का? Will be
Sir, it
capitalized
will
as an
never be
intangible asset?
classified as goodwill.
Sorry,
It will never be classified as goodwill. It will never be recognized. Internally generated.
it will never be capitalized. It will never be capitalized. Okay. So
Yes.
internally generated goodwill will never be capitalized. Okay. So friends, it's 8:32 now. So let's have a break and we will start at 8:45. Okay. In 12-13 minutes. Right. So let's start at 8:45. Let's have a break. And after break, we will discuss the accounting treatment, the measurement concept one by one.
Okay, sir. Thank you.
acquisition. Separate acquisition means you go into the market and you purchase a license or a software. Okay. In case of a separate acquisition, the asset has to be initially measured at cost. And what is the definition of a cost? You remember the same diagram, the same graphics in Ind AS 16? The cost of a PP. And what was the cost includes in PP? Purchase price plus import duty plus non-refundable taxes minus discount and rebate. Have you seen this box in Ind AS 16?
Yes, sir.
Exactly same? Yes, it is exactly same. I have copied this box from Ind AS 16 to put in Ind AS 38 also. Right? And the second one is directly attributable cost. So have you also got this word directly attributable cost?
So there is a difference.
Yeah, what is
There
the
was
difference?
decommissioning and restoration.
No. So
expenses also.
I'm not going to the third leg. So there
Okay.
were 3 boxes in Ind AS 16. In Ind AS 38 only there are 2 boxes. So I was sitting on the first box, so there is no difference in the first box, right? Purchase price plus import duty plus non-refundable taxes minus discount and rebates. Then the second box is directly attributable cost. Directly attributable cost. Second box is directly attributable cost of preparing the asset for its intended use. Directly attributable cost of preparing the asset for its intended use. Right? So what is meant by directly attributable cost? Had the asset not been there, the cost would not have been incurred. For example, if you have to purchase a license, you have to also get the registration done for that license. So whether that registration cost will become part of the cost of the license or not. It has
Yes.
to. Yes, because it is a directly attributable cost. If you would not have purchased the software, you would not have to incur an installation cost. It is a directly attributable cost or not? Directly attributable cost? Yes?
Yes. Yes, sir.
है ना? So directly attributable cost of preparing the asset for its intended use. And what is a directly attributable cost? It's a cost for bringing the asset in the location and condition for getting it ready for use, ready for intended use. So, but first box, second box. Now there is no third box. What was the third box in PP?
Initial estimate of decommissioning, dismantling,
Dismantling and
restoration expense.
decommissioning. Initial estimate of decommissioning and dismantling. And why this third box is not there in intangible asset?
Because there will be no dismantling extra, because this is an intangible asset. That
Yes.
is not there is no physical.
Yes. So what you will dismantle? You will dismantle what has been assembled. जो है ही नहीं, जिसका physical substance है, उसी को तो dismantle करोगे. You will dismantle one which has a physical substance. This is not having any physical substance. Then what you will dismantle? That is why the third one, estimated cost of decommissioning and dismantling is not there. Right? Estimated cost of decommissioning and dismantling is not there. Okay? So have you understood, Akshay, Anushi, Nitish, Ankit?
Yes, sir.
Yeah.
Yes, sir.
So estimated cost
Yes,
of
sir.
decommissioning and dismantling is not there. But otherwise, the first and second box, which includes cost, is already there, right? So friends, cost includes purchase price plus import duty plus non-refundable taxes minus trade discount and rebates plus directly attributable cost. Okay. But there is no decommissioning cost because it does not have a physical existence. Okay. Now, what is included in cost? Directly attributable cost example like cost of employee benefits, professional fees, cost of testing. For example, I'm installing a software. I'm developing a program. So all the software engineers or the employee of the company who are involved day to day, so they have their salary cost has to be capitalized. Okay. Cost not included. What is the cost not included? Launching a new product, cost for launching a new product, including advertisement and promotional expenses. if there is a cost of launching a new product, right? So you are doing an advertisement and you are also incurring some promotional expenses. So will it capitalize as a cost of the asset? Answer is no. PP में क्या था? Same was in PP also. You cost of doing a business in new location or condition with a new class of new location or with a new class of customer. So you are providing some training to the staff. You are providing some training to the staff. Whether the staff training is going to be capitalized? No. Even
No,
it was
sir.
not going to be capitalized in PP also. Administrative and other general overheads, okay? Or you are invited Amitabh Bachchan. No, those costs will not be capitalized. Audit fee expenses not going to be capitalized, okay? So these are the costs on the left side which is going to be included, on the right side which is not going to be included, means expensed off in the P&L. Any question here? Any question? Any question here? No. Okay. So you can see the beauty of this standard. When I'm teaching you this standard, I'm also getting few bits of revision of Ind AS 16. Like we have revised Ind AS 16 cost. Okay. And we have also learned Ind AS 38 cost. And we have also seen the difference between the Ind AS 16 and Ind AS 38. Okay. So friends, then deferred payment credit in terms of separate acquisition. So I want to buy a tele software. I went to buy a tele software and I asked what is the price for this tele ERP software. The shopkeeper told me 1 lakh rupee. I paid 1 lakh rupee. I bought the software and I passed an accounting entry, intangible asset account debit to bank account, 1 lakh rupee. Anushi went to the shopkeeper again. Anushi went to the shopkeeper and she asked what is the price of the tele software. And Anushi also told him that I will pay you after 1 year. So the shopkeeper has given her a price of 1,10,000. So Anushi, whether this software is going to be capitalized at 1,10,000 rupees, which you are paying to the vendor?
Sir, 10,000 is the finance cost.
10,000 is the finance cost. So why he has charged 1 lakh to me and 110 to the Anushi? Because she is paying in a delay by 1 year. She has deferred a payment, right? And in a nutshell or in a way, the shopkeeper has funded tele software to Anushi. Anushi got the tele software on day 1 like me. She started using the software and she will repay after 1 year. Okay. So this 10,000 is not a cost of the software. 10,000 is towards finance component. So this slide I have copied from Ind AS 16. Same slide. So instead of just only tangible asset, I have put the word intangible asset. So if payment for intangible asset is deferred beyond normal credit terms, what is the cost of intangible asset? Cash price equivalent is the cost of the intangible asset. And the difference between amount paid versus cash price equivalent, the difference is the interest cost. So difference between the cash price equivalent and the total payment is recognized as interest. Okay. And if it is a qualifying asset, that interest can be capitalized as per Ind AS 23 borrowing cost standard. Otherwise, it has to be charged to the P&L. Okay. Right. Now let's discuss illustration number 4 of ICAI study material. This is the illustration number 4 of ICAI study material. Yes. OBC INC acquired a software for its internal use costing rupees 10 lakh. What is the cost? 10 lakh. The amount payable for the software was 6 lakh rupees immediately and 4 lakh in 1 year's time. So 6 lakh rupees immediately and 4 lakh in 1 year's time. Okay. So 6 lakh rupee immediately and 4 lakh in 1 year's time. Is there any implication of this word 4 lakh in 1 year's time?
Yes.
Yes.
There would be interest.
So it means probably you have to do some discounting. You have to arrive the present value, and the difference between 4 lakh and present value should be interest cost, right? Because you purchased software today, you paid 6 lakh rupees today and 4 lakh you will pay after a year. Purchase taxes rupees 1 lakh. There is a purchase tax of rupees 1 lakh. there is an entry tax of 10% recoverable later from tax department. There is an entry tax of 10% recoverable later from tax department. Okay. So there is a purchase tax of 1 lakh. What is the use of this purchase tax?
Added to the cost.
Added to the cost, right? It is a purchase taxes. It is not written refundable, non-refundable. So what you will assume, if question is silent about whether this is a creditable or non-creditable, what you will assume?
Assume it should be added to the cost of the asset.
Added to the cost of the asset means non-refundable, non-creditable, right? Then for entry tax, it is written in the question. 10% recoverable later from the tax department means you got the refund or credit of the entry tax. 10%, 10 lakh ka 10%, 1 lakh. What is the relevance of this entry tax? Will it be capitalized, added to the cost of the asset?
No, this will not be added.
Why no?
No, sir. Because we are going to receive refund. We are going to receive the refund from the
department. It is not a cost to the company. It is not a cost to the company, right? Yes. Legal fee 87,000.
It will be added to the cost.
Added to the cost.
Consultancy fee for implementation.
Yeah, we can add it.
This will also be added.
The cost of capital of 10% is given. What is the use of this 10%? Why it is given? Discount rate is given.
To find the present value of 4 lakh rupees.
10% to get the present value of it.
Okay, so are you saying the 4 lakh rupees which I am going to pay after 1 year, I need to compute what is the cash price equivalent, what is the value today of 4 lakh which is going to be paid in future, right?
Yes, sir.
Yahi hai na? Okay.
Yes, sir.
So it means I have to discount it by 4 lakh rupees. Okay. Yes. You guys are very smart. Smart in good sense. You guys are intelligent. Okay. Cash paid 6 lakh rupees. 4 lakh divided by 1.1. 363636. This is the present value of deferred consideration. And purchase tax 1 lakh rupee, entry fee 0 because refundable 87,000, legal fee, consultancy fee for implementation 120. The total cost to be capitalized is this one. So this is the total cost of the intangible asset software. Then where the difference will go? So what is the accounting entry on the day one? Tell me what is the accounting entry on the day one? What is the accounting entry on the day one for this 10 lakh rupees of software purchase?
10 lakh to the asset.
Intangible asset. Intangible asset account debit to bank.
6 lakh.
6 lakh to sundry creditors. To payable or creditors. How much? 4 lakh or 363636?
3636.
So what is the value which is going to be debited in the software? Intangible asset?
10 lakh.
9,63636, right? So intangible asset account debit 9,63636 to bank 6 lakh, to payable or to sundry creditors 363,636. Okay. But after 1 year you will pay to this creditor 4 lakh rupee. So what is the entry after 1 year? What is the entry after 1 year? क्या entry?
Interest debit to bank account.
Interest account debit to bank.
Interest account debit, which is finance cost debit to payable or sundry creditors account 33,333, right? So now your payable or creditor become 4 lakh and now you will pay payable or creditors account debit 4 lakh to bank account 4 lakh. This is the accounting entry, correct? Right? So we have done one of the illustration from ICAI study material also on the cost. So when intangible asset has to be separately acquired, it has to be measured at cost, which is purchase price inclusive of non-refundable taxes plus directly attributable cost, right? Plus import duty, minus trade discount and rebates, etc., etc. Okay. Yes. Samajh aa gaya? Any doubt? Any challenge? Deferred payment credit we have discussed. This part we have discussed. So this part we have discussed. Okay. Now let's discuss the part of a business combination. Okay. Or before that, should we discuss exchange of asset? Let's discuss exchange of asset. Deferred payment credit के बाद हमने exchange of asset पढ़ा था Ind AS 16 में. So let's discuss exchange of asset. Okay. fair value of asset surrendered or fair value of intangible obtained. What is the concept of exchange of asset? So let me take you on my Excel file, exchange of asset. So do you remember the concept of exchange of asset? Do you remember?
Yes, sir. Yes, sir.
What is the concept in PP?
So concept in PP is that extent of when there is no commercial substance. Commercial substance is that the sale, different timing and economic benefits is received. If there is no commercial expense, then the asset exchange, we will book as a WDV of the asset is given up. Then in other case, that fair value of the asset is given up and the fair value of the asset received, both are available, then we will book it as a fair value of the asset is given up. When the fair value of the asset is given up not available and the fair value of the asset is received is available, then we will book it as FV of the asset is received. When both the FV is not available, then we will book the asset given up WDV.
Yes, absolutely right. And friends, so right now we are learning so standards one by one we are learning. But at the time of examination, when we have a overload of information and overload of knowledge, so how we will ensure that these concepts have to be applied in a proper manner? So just remember one thing always. Just remember one thing always. At what value you are measuring an asset? Tell me logically, and not Saminathan, but I want some female student to answer and not Anushi. I want Priya or Neha to answer. If you are going to purchase an asset, at what value you will measure that asset? किस वैल्यू पे मेजर करोगे उस एसेट को?
सर मार्केट वैल्यू और फेयर वैल्यू ऑफ द एसेट.
सिंपल सी मुझे एक बात बताइए. Your father has told you are Neha, right?
Yes, sir.
Yeah, Neha, your father has told you, Neha, please buy 1 kg packet of मूंग दाल. Okay? Neha, आप 1 किलो मूंग दाल खरीद के ले आओ. So tell me, will you go and check the market value of the मूंग दाल, fair value of the मूंग दाल? At what value will record your expense? At what value you will record मूंग दाल in your books of accounts? The price which you have paid to the shopkeeper?
Yes, sir.
Yeah? You went to the shopkeeper, you asked that what is the price I need to pay for 1 kg of moong dal. So he has given you moong dal and you paid 100 rupees. So you have recognized it, 100 rupees. Okay. Yes. So you went to market and buy a chair. Buy a chair. Chair is an asset, PP. At what value you should measure your chair, you should record your chair in the books of accounts? What value?
Sir, assets given up which value, which the cost of the chair?
No. So I'm asking, you have purchased a chair. At what value you will record that chair in the books of accounts? The consideration paid, the money which you have paid to buy a chair?
Yes, sir.
Right? The asset. See, everything is an asset. Your knowledge is an asset. Your cash is an asset.
Yes.
सब कुछ asset है. Tangible asset is an asset. Intangible asset is an asset. So you are paying in form of a cash. Cash is an asset.
Yes.
Instead of cash, you are paying through some other asset. आप कोई सामान खरीदते हो तो आप कैश पे करते हो ना. कैश भी तो एसेट है. आपने सामान खरीदा और बदले में आपने कोई दूसरा एसेट दे दिया तो वो भी तो एसेट ही है. सो टू कट अ लॉन्ग स्टोरी शॉर्ट, if I talk about at what value my asset is going to be measured, my asset is going to be measured means the asset acquired. Asset acquired is going to be measured at the fair value of the asset which I have given. And what could I have given? I have given cash. What is the fair value of cash?
Fair value of cash, sir.
Is the same value?
Sir, yes, sir.
100 rupee you have given. So what is the fair value of 100 rupee? 100.
₹100.
सिंपल 100 ना. आज आपने 100 रुपए दिए तो उसकी वैल्यू 100 रुपए ही है. ओके. सो द फेयर वैल्यू तो हम उसको कैश में लिखते नहीं है, बट इवन इन पीपीई, लेट्स से इफ यू आर अक्वायरिंग अ मशीनरी एंड यू आर पेइंग 10 lakh rupees, you are also recognizing, measuring your PPE on the fair value of the asset given up, means fair value of the cash given up.
Yes,
So
sir.
fair value of the 10 lakh, when you compute the fair value of 10 lakh, it will come 10 lakh rupees only. So
Yes.
then you will recognize the PPE at 10 lakh rupees. Right?
Sir.
Right? So always remember, whenever you have to recognize the asset acquired, doesn't matter, PPE, intangible asset, any other asset acquired, what is the value for that asset? At what value you will measure that asset? You will measure that asset at the fair value of the asset given up. At the fair value of the asset given up. Why? Because that is something which you are paying as a consideration. That is something which you are paying as a consideration. ये हमेशा याद रहेगा आपको या
Yes,
नहीं
sir.
रहेगा?
रहेगा sir. Thank
Yes.
you.
Whether you will be able to remember this concept always?
Yes, sir.
Yes. So likewise, if the transaction in exchange of asset, it is cut copy paste of the concept of Ind AS 16. If the transaction is having commercial substance, the asset acquired will be recognized at a value in the descending order. In the descending order means if fair value of the asset given up is available. Whether fair value of the asset given up is available, answer is yes. Major intangible asset acquired at fair value of the asset given up. किस वैल्यू पे मेजर करोगे अक्वायर्ड को? एट द फेयर वैल्यू ऑफ एसेट गिवन अप पे,
Given.
बिकॉज दैट इज अ कंसिडरेशन जो पेइंग. in case the fair value of asset given up is not available, then whether fair value of asset acquired is available, yes,
Yes, sir.
then only you will go to this. But the first option was not fair value of asset acquired. First option was fair value of asset given up.
Given up.
In case, as explained by Saminathan, in case neither asset given up is available nor asset acquired is available, then intangible asset acquired will be measured at carrying value of the asset given up. Will be measured at carrying value of the asset given up. Okay, WDV of the asset given up. Right? Is that clear?
Yes, sir.
Yeah, same concept. Okay. So now let's discuss with this example quickly. A Limited acquired a broadcasting license in exchange of its car. So what is the asset acquired?
License.
What is the asset given up?
Car.
The detail of the asset are given below. Please advise the cost of license in the following circumstances, right? So this is given. So now please answer this question. See, I've given you all the situation. So you will always remember this thing. In the first situation, fair value of license is given, fair value of car is given, and WDV of car is given. Tell me, what is the value of the broadcasting license?
Fair value of car we will consider.
So
That
license account
lakh.
debit. License account will be debited by fair value of car. Okay.
Yes, 35 lakh.
Why? Because fair value of car is the asset given up. Car is a consideration which you are paying, right? Okay. To car account, what should I credit in the car account?
30 rupees.
30
lakhs.
rupees. Yes,
30
30
lakhs.
30 lakhs. Okay. So Anushi has realized subsequently that it is not a toy car, it is an actual car. So from 30 rupees, he is shifted to 30 lakh rupees. Right? Yes. So license account debit 35 lakh, to car account 30, to profit on exchange 5 lakh. Anushi, is this entry right? Yes. Is this entry
Yes,
right,
sir.
Anushi? Okay. Now
Yes, sir.
second situation. Fair value of license is not determinable. Fair value of car is given and WDV of the car is also given. In that case,
At 35 lakh only, whatever
Same
the car is
entry.
given away.
Same entry. So we are least concerned about fair value of asset acquired. The first priority is fair value of asset given up. The fair value of consideration given is the first priority. If it is not available, then we are looking at fair value of asset acquired. So in this case, license account debit by what amount? 35. Your car account 30 WDV, and profit on exchange. This minus this, profit on exchange, right? Situation 3. Fair value of license is 50 lakh. Fair value of the car is not determinable. WDV of the car is given. So fair value of consideration given is not given. What to do now?
In this
Fair
case,
value
fair
of
value of asset acquired will be considered. That is 50
Fair
lakh.
value of asset acquired will be considered. So in that case, license account will be debited by 50 lakh. Car credit
30 lakh.
Profit on exchange?
Profit 20 lakhs.
20 lakhs. So what is my broadcasting license value? Fourth situation. Your fair value of license acquired, not determinable. Fair value of car given, not determinable. Only WDV is given. What is the accounting entry?
WDV, license to car.
Sorry, I forgot to write this accounting entry. Yes. What is at what value license will be debited?
30 lakhs only.
WDV of
car credit. What is the profit? Zero.
Zero profit.
Zero is
Yes, sir. In the situation number 4, if you would give the WDV of that license, then it will be more interesting, sir.
So basically, because WDV of license, why I have not given? Because you are the buyer. You are the one who is capitalizing the asset. The WDV must be sitting in the books of the supplier, right? So I am concerned about my books of accounts. Okay. So that is why I have not given this.
Okay, fine, sir.
Because
Then
in
it
my
will
books, because asset given up is sitting in my books, and hence WDV must be there. Okay.
Yes, sir. I understood it. The exam point of view, it will be more tricky. That's what I'm saying.
Yeah, you are right. You are right. Okay. But in this situation, 1, 2, 3, 4, this is a complete gist along with the concept and accounting entry in case of exchange of asset for PP, for intangible asset, both. Right?
Yes, sir. It's brilliant. You have given all the situation. Thank you.
So you just need to, instead of going in detail, you just need to spend 3-4 minutes on this working and this concept on the Excel file. You will become champion even for exam. Believe me, in exam, there could be a fat in the question. The question may be lengthy, but conceptually, it will be breakable. You remember in the last class, I told you, if you run with a big problem, you will be in a big problem. Just split the problem into parts, and 50% of the problem will no more be a problem. Okay. Yes. So friends, we have covered in initial measurement. What we have covered 2 concepts in initial measurement. So we have covered separate acquisition, right, which is at cost, and we also covered exchange of asset. We also covered deferred payment credit. Now come to the part of a business combination. So how an intangible asset is going to be measured when it is part of a business combination? For example, a company has acquired a company, another company, and many intangible assets come with that company, right? So like goodwill. So internally generated goodwill is not allowed, but when you are purchasing a company and you are paying a consideration more than the value of the net assets, in that case, whether that goodwill will be capitalized or not?
Then it will be
Yes, sir.
capitalized.
It's purchased goodwill will be capitalized.
Yes. Then the purchase goodwill will be capitalized. It is a purchase goodwill. Very good, Saminathan. So I like the word you have used, purchased goodwill. Yes, it is a purchased goodwill. It is not an internally generated goodwill. So friends, in case when you acquire a company, and just think logically, when you acquire any business, when you acquire any asset, acquire any business, okay, in the business there are a lot of assets. And when you acquire a business, so whether you value your business only on the basis of assets sitting in that business, or you are also valuing that business from the perspective of market value, from the perspective of what value this asset will give. For example, when Facebook acquired WhatsApp, and Facebook has paid of roughly $20 billion to WhatsApp. And if Facebook would have gone only by WhatsApp value of the assets, so WhatsApp has a 40-50 employee all across globe, and probably they have an asset worth less than $0.5 billion, right? So why Facebook has paid $20 billion to acquire a company whose tangible and intangible asset sitting in the balance sheet, whose tangible assets has a value of less than $0.5 billion? Why? Tell me.
For the goodwill.
For the goodwill, for the other intangible asset also, where the company is foreseeing a future economic benefit, right? So
Yes.
that is why, so whenever a company is acquiring another company, they are not going only by the value of the asset sitting on the balance sheet. They are also looking at what kind of future economic benefit that company will arrive. Correct? For example, Kia Seltos. Have you heard about Kia car?
Yes, sir.
Yeah.
Yes, sir.
Yes, sir. Kia Carnival.
Nowadays, one new car has also come, Citroën. What is the name? Citroën. It's a new car. Okay.
Citroën, yes.
Okay. So let's say this car wants to expand the business in India. So let's say they have the deep pockets. So they want to buy Maruti. Maruti means they want to acquire a controlling stake in Maruti, let's say. So for example, the value of the Maruti in terms of its assets is, let's say, 1 lakh crore. So when they will acquire Maruti, so will they only pay 1 lakh crore or more than 1 lakh crore?
More than 1 lakh crore.
Why? Because Maruti has the largest distribution network in India. Largest distribution network. You will find Maruti showroom everywhere. You will find Maruti mechanic everywhere. Even in the villages, you will find somebody who can repair Maruti car. Okay. So when they will acquire Maruti, what future economic benefit they will foresee by acquiring Maruti? They will foresee that by acquiring Maruti, we will get all the service centers, showrooms, all the places, all the network, reachability, accessibility from Maruti. That is what they will look at, right? So the point is, my dear friends, when the companies are acquiring another company, they are valuing there are two things. Number one, they are valuing the assets and liabilities on the basis of fair value. Because मैं acquire कर रहा हूं, मेरे पास assets है नहीं, मैं acquire कर रहा हूं. So the companies are valuing the assets and liabilities at fair value, number one. Number two, there may be some intangible assets which are not capitalized by Maruti. But this company, when acquire Maruti Suzuki India Limited, this company will recognize those intangible assets also because the company is paying for that, like purchased goodwill, okay, like other intangible assets. Okay. So friends, intangible assets are also arise in terms of business combination. So when you acquire intangible asset through business combination, the cost of intangible asset is equal to fair value on the acquisition date. So intangible asset has to be measured at fair value on the acquisition date. And intangible asset is recognized separately from goodwill if fair value is measured reliably, and even if those intangible asset has not been recognized by the acquirer in the books. Like distribution network. So why Kia is paying extra to Maruti? Why?
Because they have multiple dealers across the country.
Yeah, so for the distribution network. But do you think that Maruti has capitalized this internally generated distribution network in their balance sheet?
No.
Because they haven't paid for anyone, right? But this Kia Seltos, when Kia is paying, so of course there are business valuers, right? So might be as a student you are thinking, sir, how these things are happening? So there are business valuers who engage and who will value who will see every touch point and who will value the assets, right? That what is the value of this tangible asset? What is the value of this intangible asset? Okay. So that's how it is getting fair valued. Okay. So friends, if there is any other intangible asset other than goodwill, and if it is separately measurable, then that intangible asset is also required to be capitalized. Okay. Like customer list, market share, like this thing, goodwill, distribution network. So these can be capitalized if it is measurable. So let's understand with the help of an illustration from ICAI study material. Illustration number 5. On 31st March, Earth India Limited paid 50 lakh rupees for 100% interest in Sun India Limited. 50 lakh rupees for 100% interest in Sun India Limited. So what is the consideration paid?
50 lakhs.
For 100% interest means Earth India is acquiring Sun India.
All the assets and liabilities.
At that date, Sun Limited means acquirees net asset had a fair value of 30 lakh. So how much extra has been paid?
20 lakhs.
If question would have been silent, what is the accounting entry if question would have been silent? Where the balance 20 lakh will go? Assuming
Goodwill.
the next paragraph is not there. So 20 lakh kahan jayega?
Intangible asset.
Intangible assets as goodwill.
Goodwill. So in that case, the accounting entry would have been net assets of Sun Limited account debit 30 lakh, goodwill balancing figure account debit 20 lakh, to bank account 50 lakh. Correct? Correct?
Yes,
okay.
Yes, sir.
But in this question, the question doesn't stop here. The question has given you more information. In addition, Sun Limited also held the following rights. Trademark named Grand, valued at 1,80,000 using a discounted cash flow technique. Trademark named Grand, valued at 1,80,000 using a discounted cash flow technique. Okay. So this acquiree Sun India has a trademark also. And how this business valuer has valued the trademark 1,80,000, and they have applied the discounted cash flow. That how much cash flow they will arise by this trademark, and what is the DCF method? According to DCF method, what is the present value of the cash flows which will arise in future due to this trademark? So whether this trademark is going to be capitalized as an intangible asset?
Yes, sir.
Yes.
Yes, sir.
Even though Sun Limited has not capitalized, but yes, it has to be capitalized in the books of
Earth Limited.
India Limited.
Earth Limited. Okay, it has to be capitalized. Sole distribution right. This company also has something. Sole distribution right to an electronic product. This company is the only company which can sell a class of a electronic product. This company has only the right, sole distribution right, and the future cash flow from which are estimated to be 1,50,000 per annum for the next 6 years. 10% is the discount rate, 6%, 10% 6 year 10% annuity factor is 4.36. So what is the use of this 4 lines? Kya use hai? What is the use
Discount the annual cash flows for next 6 years.
These will be calculated, and left will be our goodwill.
Okay, so you guys are very advanced. I am asking what is the use of this 3-4 line you are giving.
To arrive at the present value of future cash flows.
So this is another intangible asset, sole distribution right. So basically, why this company is paying 20 lakh rupees extra? Goodwill is a residual number. So goodwill क्या है? Goodwill is not a dedicated asset. Goodwill तो एक image है, एक नाम है, right? So goodwill is not a dedicated asset. But why this company has paid 20 lakh rupees extra? Because this company has seen one of the trademark which may be beneficial to Earth. Sole distribution right which may be beneficial to the Earth, right? So the point is this company should capitalize trademark, sole distribution right also. And how this company will recognize sole distribution right, major sole distribution right? 150 multiplied by 4.36, correct? This will give you the value, right?
Yes.
And the balancing figure will be goodwill. This is how this thing has to happen. Purchase consideration 50 lakh, net asset acquired 80 lakh, trademark 180, distribution right 150 multiplied by 4.36, 3834 is the value of the assets acquired, including dedicated intangible assets, and the remaining 1166 is the goodwill, right? So whenever the asset is acquired in a business combination, it has to be measured at fair value. Is that clear?
Yes, sir. Clear.
Very much clear?
Yes, sir. Very much.
Yes, sir. Very much clear, sir. Sir, why you are giving the advance answer means which you gave examples, lot of examples earlier in PPE standard, all this thing, considering having in keeping in mind in our things, so we are able to answer in advance as well, sir.
Okay.
It's all good for you only, sir. It's our pleasure
your
to have
goodwill,
such a
sir.
wonderful teacher.
Okay, thank you. Yeah. So friends, we discussed separate acquisition, deferred payment credit, exchange of assets, business combination. We discussed these three concepts, right? So let's say in exam, this same question will come as a part of a question. And this entire stuff is given, right? Trademark is given, sole distribution right is given, but this information is not given, let's say. This information is not given. Only given that the company has a sole distribution right to an electronic product and the company is expecting a good amount of cash flows to be arrived in the next 6 years. Then what you will do? Question में आपको बताया है there is a sole distribution right and you will get a good amount of cash flows in the next 6 years, but you haven't given any values. And the same question is there only for sole distribution right, this 150, 10% annuity factor, 10% discount factor, this three information is not given. Then what will do?
Sir, then instead of writing goodwill, we will write this and the remaining amount will come in sole distribution right. We will recognize it as intangible asset instead of goodwill.
Sir, we will don't recognize sole distribution, right? Because it is not probable future economic growth.
Sir, the reason is that it's not probable that the future economic benefit is not measured at this point. Cost should be measured initially, but in this case, those aspect is missing. So that these portion, whatever the 6 lakhs for 54,000 something else we added to that things they reduced from the goodwill. Now the goodwill will get increased.
Yes. So standard says that the intangible asset, see, goodwill is a residual number, right, Anushi? Standard says that, for example, if you are recognizing some intangible asset other than goodwill, those intangible assets are required to be recognized when it is measurable. When it is measurable, when you can measure it separately, right? If it is measurable, then it has to be capitalized separately. Otherwise, it will be subsumed in goodwill. It will be subsumed in goodwill. In that case, if the value would not have been given, so this distribution right would not have been there, and the entire amount 1166 plus 654 will go to goodwill. Okay, will go to goodwill. So this will be subsumed in goodwill, right? Clear? Is it clear or clear?
Clear in mind.
Clear in mind. Very good. Separate acquisition we have covered. Part of business combination we have covered. Exchange of asset we have covered. Now let's go to the government grant. And before that, let me come to my Excel also and let's see quickly. Mode of acquisition we have covered. Separate acquisition deferred payment term, and business combination, this we have covered in the slides, and exchange of assets we have also covered, right? Then intangible asset acquired by way of government grant. Okay, first let me tell you the concept and then I will explain you the concept with the simple example. Simple means simple to remember. Okay, acquired by way of a government grant. At times government is also giving some intangible asset to promote the companies at a free of cost, free of charge, right? An intangible asset may be acquired free of charge or at a nominal consideration by way of a government grant. For example, import license, quota, right to access some restricted resources, airport lending right. So these may be acquired free of charge or at nominal value from government. Okay. Friends, you must have seen government, there are a lot of intangible assets like licenses. Government is also giving some licenses like trade license, manufacturing license, drug license. Okay, a lot of licenses are there. So instead of taking a money, government is promoting the company and government is saying, let's say I'll give you telecom license if you operate your cellular network in the villages. Just to promote my initiative Digital India, I need some player who will work in the villages, right? So instead of charging 5,000 crores for a telecom license, I will give you this telecom license at 100 crores. Okay. But you have to digitize rural India. So friends, is it a government grant or not? It's a government grant? Yes, it's a government grant. So
Yes, sir.
either government is giving the intangible asset free of cost or government is giving intangible asset at a very discounted price. So it is a government grant. So now question comes, how will you measure intangible asset when it comes as a government grant? क्या करेंगे, कैसे measure करेंगे? For example, the government has given telecom license free of cost and the fair value of the telecom license is 5,000 crores. Tell me, what is the accounting entry I need to pass on the day one?
It will measure on the like what is the asset given, means what is the consideration given.
Zero consideration given to the government.
So we'll show both asset and government grant separately.
Sorry?
We show the asset and government grants both separately.
Both hai?
Like fair value of the grant, we show one as asset and the other one as government grant separately.
So there are two options. Option number one, you can measure this intangible asset at fair value. Option number one. So you will measure at fair value, you will pass an accounting entry, intangible asset account debit 5,000 crores. Intangible asset license account debit 5,000 crores. But what will you credit? You haven't paid anything. Credit क्या करेंगे?
Government grant.
To government grant liability. Right? So 5,000 crore asset, 5,000 crore liability. For example, government has given this grant for 10 years. So this 5,000 crore intangible asset has to be amortized over a period of 10 years. It will become zero. What is the P&L impact every year? 5,000 crore you have recognized at fair value intangible asset and 10 years is the life.
We will show
0.5
amortization.
crore each year.
500 crore is the amortization every year. What about this liability? You are not required to pay anything. What about the liability? 5,000 crore liability you have also recorded. So you will amortize that liability over a 10-year period also. Like every year you are passing an accounting entry, amortization expenses account debit to intangible asset, 500 crore. You will also amortize the liability for the next 10 years. So what is the accounting entry? Liability, government grant liability account debit to other income account, 5,000 divided by 10, 500 crores every year. So every year in the P&L, what is the other income?
Government grant will be the other income.
500 crores.
500
And what is the amortization expenses? 500 crores.
500 crore.
What is the net impact in the P&L?
Zero.
Ideally, it should be zero because the government grant has come at a free of cost, zero value. So P&L में impact भी zero आना चाहिए. So one way you can capitalize government grant and you can credit government grant liability. You can capitalize intangible asset and credit government grant liability at fair value. One way. Second way, you can capitalize government grant at nominal value, means 1 rupee. What is the accounting entry? Intangible asset
to government grant.
To government grant 1 rupee or to other income 1 rupee, right? And why 1 rupee? Just for the identification purposes. So that it will be identified that this intangible asset is there. right? So standard says that in accordance with Ind AS 20, record both intangible. Ind AS 20 is a standard which talks about government grant. Standard says that in accordance with Ind AS 20, record both intangible asset and government grant at fair value. Or you can recognize the government grant at nominal amount plus any expenditure which is directly attributable to preparing the asset for its intended use. For example, the government has told that I will not ask any money. Government told that I am giving you this license free of cost, but you have to get the registration done in your name. And the registration cost is 1 lakh rupee. At what value you will measure this government grant and intangible asset? At what value you will measure the intangible asset if you are applying a nominal cost approach?
1 lakh 1 rupee.
Not in that case, 1 rupee is not required because identification to ho hi gaya na, now there is a value. So you can record intangible asset account debit intangible asset account debit to bank account 1 lakh rupee. The expenditure which you are paying, correct?
Yes, sir.
Now let's discuss this concept with the help of few examples, right? So intangible asset acquired by way of government grant. So government is giving either free of cost or at a concessional price. Option number 1, recognize both government grant and intangible asset at fair value. For example, the government has provided free mining rights to the company for 5 years. The fair value of such right is 5 lakh. What is the accounting entry? Mining right intangible asset account debit to deferred government grant 5 lakh at the time of acquiring rights. Asset account debit 5 lakh, liability credit 5 lakh. Net balance sheet impact 0, asset 5 lakh, liability 5 lakh. Now this asset is going to be amortized over a 5-year period. So what is the value of amortization every year? Amortization expense account debit to mining rights intangible asset. 5 lakh divided by 5, 1 lakh, right? And this liability of government grant is also amortized. Deferred government grant account debit to other income 1 lakh. So every year there is an income of 1 lakh, there is an expense of 1 lakh. So net P&L impact 0. Correct. Have you understood this accounting treatment?
Yes,
When you are
sir.
recognizing at fair value?
Yes.
Yes, sir.
Yes.
Very well. आप में से
Yes,
कोई है
very
जिसको
well.
समझ नहीं आया?
Sir, I have one query, sir.
Yeah.
Sir, we have studied that under the conceptual framework, we have studied that under enhancing characteristic, there is a comparability and timeliness, variability like that. In this government grant, I'm thinking that the comparability is missing. See, when the one entity is booking the government grant as a fair value, another entity is the same kind of grant is booking it nominal value and any expenses. When I'm looking the both, the comparability is missing, sir.
Now you tell me why entity. So this is, so first of all, this is
See,
an accounting.
I will add some more insight on this. See, the particular village, say example, if the telecommunication as an example, is given the licenses free of cost to the whoever is developing. Say example, entity A and entity B, both are involved in that operation, both are eligible to that. In one entity, they are using the fair value method. Another entity, they are using that nominal value method. That either or the option is given, right, in the standard. So in this case, I am feeling that the enhancing characteristic we studied in that the conceptual framework, that is a comparability is missing on this part. That is what I need the clarity from you, sir. Thank you.
Okay. Yeah. So now let me clarify. And Saminathan again, so I'm not getting biased with anyone, but so honestly, I'm always pleasantly surprised when you ask questions in these ways, right? And since you are vocal and you are asking questions, and I do understand the people must have in their mind, right? But they are not asking questions. They have the equal bent of mind, but he is asking and many are not asking. So that's the only thing, but a good question. And in addition to this government grant, so let me give you more concepts, okay, so that you will be able to appreciate enhancing characteristics and comparability in a different aspect. I have told you a concept in accounting policy. Have I covered Ind AS 8 with all of you?
Yes,
Changes
sir,
in
it
accounting
covered.
policy, accounting estimate and correction of errors. Yeah.
Covered, sir.
Yes, sir.
In accounting policy standard in Ind AS 8, I have covered one aspect that accounting policy has to be applied consistently from one period to another. Okay. Accounting policy can be changed when there is a change in Ind AS or when it gives more reliable and more relevant information. When it gives more reliable and more relevant information. Okay. So friends, and this is how so standards are also developed. So standards has given you a choice, and not in government grant standard, in many standard, they have given you a choice. Okay. Like PP, in PP there is a choice at the time of subsequent measurement. What is the choice?
It's a cost model or revaluation model.
Cost model or revaluation model, right? In a government grant there is a choice to recognize the government grant, recognize the asset in the government grant at fair value or at a nominal value. So why these kind of choices are given? Why? So these kind of choices are given to enhance the characteristics or to enhance the comparability in comparison to the facts and circumstances in which the company is operating. Right? In which the company is operating. And let me give you a very good view here. So for example, you have invested in mutual funds, okay? And on the reporting date, you have invested 1000 crores in mutual funds, but the market value is 1600 crores or 1500 crores market value. In our accounting standard, we were showing it at cost when the market value is higher. But don't you think the real value when you're looking at a statement of financial position, when you are looking at the end of the year, your net worth is 1000 crore or 1500 crore in terms of investment in mutual fund? It is 1500 crores. And there is very less chances if you will sell these mutual funds tomorrow, there are very less chances that this 1500 crore again will become 1000 crore. Probably it will become 1400 crores, 1350 crore, 1450 crore, but very less chances. So the point is why standard has given alternate choices at various places. So the reason behind that, if the standard would have restricted to nominal value or only fair value approach, probably the standard was not able to cater all the situations where you know fair value was not given or fair value is absolutely not measurable. In that case, it has to be apply a nominal value approach, or where the fair value is clearly evident, right? The product is a marketable product. It is clearly evident. In that case, to show the more relevant and reliable picture to the shareholders, the company has to recognize the asset at fair value. And of course, the credit entry, because it's a double entry system, the credit entry has to flow to the government grant liability account. Okay. So comparability is not missing. Comparability has to be seen and appreciated with the facts and circumstances, the operating and economic environment in which the company is operating. Right, Saminathan? And that's how at various places, alternate accounting treatments are given in the standards at various places. Okay. So when you read financial instrument, you will again say, sir, enhancing characteristics, which is comparability, is missing. Because it talks about classification of a financial asset at amortized cost, FVTPL, FVTOC, depending on the business model and the cash flow model. Right? So it is on the basis of facts and circumstances. Right?
Okay, sir. Thank you, sir. Here in after I will not ask it because it's very clear now that so that the intention of the Ind AS, they given the two options, but the entity anyhow they will not miss that substance for recording that transaction. So they are giving the option anyway. Something is better than nothing. So at least they will bring into the asset into the books of account. Thank you, sir.
Yes.
Your explanation is helped me to understand in a lot. Thank you so much.
Thank you. Yeah. So friends, What is the accounting of intangible asset when it is coming through a government grant? Either it will come free of cost or it will come at a concessional price. In that case, the first thing is we have to either recognize government grant and intangible asset both at fair value. So in that case, intangible asset account debit to deferred government grant. This intangible asset will be amortized over the period of the grant, and this government grant is also amortized and income should be credited. Second option, recognize intangible asset at nominal cost plus directly attributable cost, if any. For example, the government grant has given free mining rights to the company but will charge 1 lakh rupee for the registration. Then mining right intangible asset account debit to bank account. Assuming there is no registration charges, then mining rights intangible asset account debit to other income. Simple, 1 rupee. Right? So all three scenarios I have covered here. All three scenarios. Is it covered, all three scenarios? Answer is yes. All three scenarios have been covered here. Right? Okay. So what we have covered, friends, what part we have covered? So we have covered separate acquisition we have covered. Okay. Then what we have covered? In addition to separate acquisition, we have also covered what? I hope my PPT is visible, right?
Yes, sir, visible, sir.
So separate acquisition we have covered, part of business combination we have covered, exchange of assets we have covered, government grant we have covered, right? Then internally generated goodwill. Then coming to the internally generated goodwill. Friends, whether internally generated goodwill is allowed to be capitalized?
No, sir.
No, sir. Capitalized. Internally generated goodwill. It is not allowed to be capitalized. Then what happens with internally generated goodwill? It cannot be capitalized. The recognition is prohibited in Ind AS 38. It is prohibited. Nothing doing. You are not paying any money for that internally generated goodwill. It is like you are doing good karma and you are building your name, right? It is just like it is a result and output of karmas. You understood karmas, right? So you are doing a good job and that's how you're building your name. That's a goodwill. That's a goodwill. Okay. Right. So internally generated goodwill recognition is prohibited. Right. Now the last concept we are left with on this measurement at initial recognition is internally generated intangible asset. Right. Little bit complex concept. This I will start in the next class. So friends, now let's quickly do the revision in the next 7-8 minutes that what we have covered today. Friends, we started with what? We started with the objective and scope of intangible asset, and we understood that all intangible item is not covered under Ind AS 38. For few intangible item, there is a separate standard. And those separate standard will be applicable to those item, but other than those item, for all intangible item, Ind AS 38 is applicable. Definition of asset. So what is the definition of it? It's a resource controlled by the entity as a result of past event and which results in future economic benefit. Okay. What is the definition of intangible asset? It's an identifiable non-monetary asset without physical substance. Without physical substance, we have discussed what is meant by without physical substance. And non-monetary asset we have discussed. Non-monetary asset are those assets which are not a monetary asset. Okay. Non-monetary asset are those assets which are not a monetary asset. Let me color here. Non-monetary asset are those assets which are not a monetary asset. And what is a monetary asset? Asset which gives rise to a fixed amount of cash. Asset which gives rise to fixed amount of cash. Identifiable asset will be considered as identifiable when it is separable or arises from contractual or legal rights. Okay. Recognition criteria. So what is the recognition criteria? Future economic benefits should be provable, cost can be measured reliably, and it should meet the definition of intangible asset. Okay. Initially, intangible asset has to be measured at cost, and there are different mode of acquisition. For example, when you are acquiring intangible assets separately, then intangible asset has to be measured at purchase price plus import duty plus non-refundable taxes minus trade discount and rebate plus directly attributable cost. If it is acquired on a deferred payment terms, then intangible asset has to be measured at cash price equivalent. Okay. If intangible asset is acquired through exchange of asset, then intangible asset has to be measured on the basis of fair value of the asset given up. If the fair value of the asset given up is not there, then Fair value of the asset acquired.
Acquired.
If fair value of the asset acquired is also not given, then
Then
WDV of the
asset
asset,
W.
then WDV of the asset given up. Okay, right. So we have covered separate acquisition, deferred payment, exchange of asset. Then what we have covered? Then we have covered business combination. Intangible asset acquired through business combination. So friends, when intangible asset acquired through business combination, that intangible asset has to be measured at fair value. And even those intangible asset needs to be recognized separately in addition to goodwill, even those intangible assets which are not recognized in the acquiree's balance sheet, which are not recognized even in the acquiree's balance sheet. Okay, right? So that is there. And then friends, so उसके बाद और क्या हमने सीखा? उसके बाद हमने सीखा, then we have covered government
grant.
So intangible asset and this thing, intangible asset and government grant has to be measured at fair value. Okay, right? So it could be at fair value or it could be at nominal cost also, or it has to be nominal value plus nominal value plus expense directly attributable to that asset. Any expense, incidental expenses like some installation expenses. So government has given you some license or software, and you need to install that. So you have to incur installation expenditure. So that way. Okay. Right. After that, we have covered what? Goodwill. So internally generated goodwill is not allowed to be capitalized. It has to be expensed off in the P&L. Right, guys?
Right, sir.
Okay, so have we understood the concept in detail? Have we understood the meaning of intangible asset, the meaning of control? We did so many questions on control, power, future economic benefit, separability, identifiability. Okay. So are we
Sir,
good?
Hello, sir.
Yes.
Sir, I want to understand like what is the difference between Ind AS 38 and Accounting Standard 26?
So there are few differences, right? So when I will complete in the next class, you will be able to understand. But since you have asked this question, let me tell you. So like in Accounting Standard 26, revaluation model was not permitted. But in Ind AS, revaluation model is also there. You understood revaluation model? You understand?
Yes, revaluing the asset again.
Yes. So PP wala jo revaluation model tha, that is number one.
Yes.
Number two, if I talk about the life of the intangible asset. So if I talk about the life of the intangible asset, like, few intangible assets have an indefinite life, right? Because you're not aware that for how many years you'll get the future economic benefit. So Accounting Standard 26 has given you assumption of 10 years, that the life, in case life is not determinable, you kept it as a 10 years. But in Ind AS, there is a concept of indefinite life also. Okay. So this way, there are few concepts, and Ind AS 38 is more detailed than AS 26. So the concepts are given in more detail, right? Revaluation model, other comprehensive income. So revaluation surplus will be go to other comprehensive income. The concept of other comprehensive income is not there in accounting standard. So this is one of the major difference. Okay. So there are 4 or 5 big difference between Ind AS 38 and AS 26. So I'll cover that in the next class, because when I'll complete the concept, then you will be able to appreciate, अच्छा ये वहां नहीं था और यहाँ पे है. Okay.
Yes, sir. Okay. Thank you.
Okay. Thank you. Any other question?
Sir, could you please give the a small explanation of option 2 of government grants again?
Option 2 of government grant. Okay. In this Excel file.
Yes, sir.
Yes. So option 1 you understood completely now?
Yes, perfectly.
So option 1. Option 2 is, you need to recognize intangible asset at nominal value, right? At nominal value. Plus, if you have incurred any directly attributable expenditure, then you can add that also. Okay. So first treatment, let's say you have got an intangible asset free of cost from the government. There is no directly attributable cost, nothing, zero cost. At what value you will recognize? 1 rupee.
What?
It could be 100 rupee also. If you will pass an accounting entry for 100 rupee, it is not wrong. Okay. So nominal amount, and nominal amount means the amount only for identification purposes. So that when you do the physical verification, there must be that intangible asset, right? So identification purpose के लिए आपको करना है 1 rupee. But let's say you got an intangible asset which is license or software, let's say, okay, and government is saying that I am giving you the software, installation cost you have to bear. So installation cost is a directly attributable cost of the software. Yes. Had this software not been there, installation would not come into picture. है ना?
Yes, sir.
So in that case, what you can do simply, whatever is the installation cost, with that value you can capitalize the software. Intangible asset account debit to bank account. Right? You are not required to add 1 rupee. That 1 rupee or 100 rupees only for identification purposes. But now since you have incurred some bit of cost like installation, registration, वो अपने आप ही value में आ गया. वो अपने आप ही value में आ गया. Right?
Yes, sir.
Yes, sir.
So is that?
Sir, I have seen some of the balance sheet like God account. I have seen some of the company, the firm, partnership firm, individual carrying the God account for 500 rupees, 1 rupees, such a long time.
Sorry, Saminathan, I have understood what you are saying.
Sir, in some of the balance sheet, I have seen the God account. I say 500 rupees, 1,000 rupees. And God, GOD. Yeah.
Achha. So that is not an intangible asset. That is just like just paying some money to God.
Yes, sir. I have seen that. The amount it will be there, there only in the balance sheet.
Yes.
Like nominal account, what we have discussed now.
Yeah.
To identity.
So will that
Any other
nominal
question?
account? So will that nominal value also be amortized?
1 rupee will not be amortized. You will not amortize 10 paisa, na? No, it should not be amortized. Even if you have kept 100 rupees, it will not be amortized. But of course, let's say you spent registration, you spent 10 lakh rupees, 1 lakh rupees, 50,000 rupees, that will be amortized. Okay.
But at the time of retirement, we need to, yes, sir.
Yeah. So, but if you have put some nominal amount for the sake of identification, it will not be amortized. Yes.
Sir, my thing is that at the time of retirement, that the obligation is get over. That time we can reverse it, that nominal again, then make the book is 0.
Of course, because it was for the identification purposes. Now intangible asset is no more. Of course, there is no need to identify. It has to be reversed. Otherwise, it will show a wrong picture. Okay. In the books, 1 rupee may be there, but the asset may not be there. Okay. So at the time of expiry or retirement, of course, you need to reverse whatever you have 1 rupee, 100 rupee, whatever you have tagged 10 rupee, it has to be reversed. Okay. So thank you, student. Thank you so much. We have covered around 50% part of intangible asset. In the next class, we'll complete that. Okay. Thank you so much. I hope you have enjoyed the session. Bye-bye. Take care. Stay safe.
Thank you, sir.
Thank you, sir.
Thank you so much, sir. Have a great day.
Thank you.
Thank you, sir.
Thank you.